All right. Check, check. Hello, hello. It is Tuesday, January 16th, 2024, 7:32 a.m. A little bit live, a little bit late, still in the holiday groove. 2 minutes late. I think that's all right. Okay, so let's go ahead and get all set up here. Make sure everything's firing. Make sure we're ready to make some money today. The charts are looking good. Just checking the screen health at the moment. It looks pretty good. Let me know if it sounds all right, if the audio is coming through all right, if the video is coming through all right. Looks like it is. Hey, Steven, everything coming through okay? I'm going to assume it is. All right. So, hope you had a nice weekend. Hope you had a good holiday. Getting into the swing of things with the course and the software. Great. If you have any questions about any of that stuff, we can talk about it during our downtime. But for now, I just want to focus on the live trading. Just to kind of prepare for the day. And you got to get out of here early today. Congratulations. I'll keep the information between you and me, but I often think about the same thing. Especially when my little one is acting up. All right. So, yeah, did you have a chance to check I posted the detailed analysis in the elite members area. You probably didn't have a chance to check it out because it's, early for you. But basically, without going into too much detail and rehashing it all here, it looks like things are starting to unfold. We've got the indices here. Go ahead and just bring up ES. I'm looking for, this is a pretty strong weekly pattern. So I'm waiting for a congestion exit to the downside on the indices. So I'm interested in, decent opportunities to get short. I think this week is going to be full of a lot better opportunities than last week. Bonds look like they're already heading lower. If we go ahead and look at the 30-year here, you see we're trying to exit congestion down on the bonds. So I think the bonds and the dollar being strong today are leading to the downside. That should put upward pressure on rates. And I think stocks are going to, start heading to the downside as well. So I feel pretty confident in that unless something dramatic changes today. The metals were under a lot of pressure this morning. We'll go ahead and check in on those as well. Gold real quick. Yeah, see, I think gold. Again, I'm not going to go into all the stuff. You can watch that video in the members area when you have time, but basically laid out why I like shorting today. Stocks, we're going to have to wait, right? Because they can kind of chop around a bit. I was thinking a lot about this weekend. Sometimes you can get these disparities between rates and stocks that will, they'll diverge for sometimes a period of, a few weeks. It can happen. So, I want to take advantage today. Bonds look like they're definitely going down with rates going up. I mean, with a stronger dollar, which right now we've got the dollar making a run against basically all the other major currencies. So strong dollar, dropping bonds, rising rates. I think, stocks can oppose that longer than we think. If I get a good short opportunity, let's say on the Russell, that's the one I still think is going to be the weakest. But other than that, I think the lowest hanging fruit today, short bonds and short the metals. Crude and natural gas are a bit of a mess right now. Crude is still, I went into it in the analysis, but I'm going to probably stay away from those today unless I see something just, out of the ordinary that I like. Ags, meats, and the crypto are also a bit of a mess. So I think the major focus for today definitely is going to be shorting bonds, shorting metals, right? And then for those who like the FX pairs, if you're trading Forex or you like trading the FX futures, which I don't, because they're all correlated. And if I'm going to go, if I'm going to take a trade in this family, I want something that can move. And, FX is just a bit more, slow and choppy. But some people like that. I think, the dollar looks very strong today. So shorting the euro, shorting the pound, on pullbacks looks like a pretty good bet for today. Again, full risk disclaimer, all that good stuff. But I'm going to be focusing primarily on looking for shorts on the bonds and the metals and gold. I wrote about this in the members area as well. I wrote a PDF summary of the video report that I did. And with gold, I'm going to probably stay away from shorting just because there can be some cross flows, right? You can get some money flowing into gold right now because of this Yemen war risk. But then you got, money flowing out of gold because of, everything else is dropping. So a little bit of cross currents there with gold. I think that's the same thing with crude. And I probably should have stayed away from them on Friday, but I learned, thought about this weekend. I thought, why didn't I just focus on something that was just a little less subject to the cross currents of, everything looks like it wants to drop right now. So there's some kind of liquidity thing going on. I think that has to do with the bank term funding program, coming up in March, for renewal. We're going to see what the Fed does. So I think in this exact moment, crude and gold are kind of caught between cross currents, like liquidity is evaporating. Everything kind of wants to head down. You can see that bonds want to go down. The dollar wants to get stronger. Stocks want to go down. Rates want to go up. So that's why we're seeing copper, platinum, lead the way to the downside. But, crude, gold, and silver to some extent are kind of stuck between those currents. And when we can see it and where we can avoid it, we don't want to take trades in markets that are caught between cross currents because it makes our life more difficult than it needs to be. So I hope that makes sense to you. It's something I put a lot of thought into over the weekend. So lowest hanging fruit today, short bonds, short metals, basically is what I'm going to be paying the most attention to. Doesn't mean we're not going to see what the stocks are up to. And if I see something really good, doesn't mean I won't jump in. It just means that, those are ones that are going to be the primary focus. I hope that makes sense. So with that said, let's go ahead and take a look. I'm going to go ahead and bring up the hourly chart, the day trading charts here. I have the 15-minute up just because, why not? Like I went back and, looked at some of the stuff from last week and a couple of trades. There was one on platinum on Monday. You know about that one. I don't need to redo that one. But this one here on platinum, I'm covering so many markets here, and this is a new thing for me in terms of live streaming and talking about what I'm seeing and switching back and forth. It's a little bit, I have to get used to keeping up with all of it. It's different than just sitting here flipping through thinking to myself, right? So I did notice that this one here on platinum was a pretty nice short opportunity from Friday that I wish I'd seen. I didn't see it at the time. And these are the ones we want to use the 15-minute for. That as it starts, these are the kind of trades ideally that I'm looking for. Something where, let's say if I get short the hourly, I want something that ideally has a chance to run like this, right? Because in that situation, if your original risk on this trade is, let's say, $500 or something, as it starts to drop, and if you use the 15-minute chart correctly and you can start pyramiding that winner, that really is, those are the wins. You get a couple of those a week. Those are the ones that pay for a whole lot of losers and ultimately lead to the profitability. So those are the ones that I'm looking for and waiting for. And some weeks works better than others. So let's go ahead and get ready for our 8 a.m. check. No major news that I could see coming out today. So we'll just quickly do a lay of the land here through the indices. But really, again, until they show me they want to break out to the downside, I'm just, they're just kind of lollygagging around up here in this daily congestion zone, right? So if we turn our attention back to the weekly, right? If my forecast for the week is for stocks, for the indices, is that if the weekly resistance level here is going to hold, and if we're going to get back down here, the only way that's going to happen is if this daily chart here does what? If it exits congestion to the downside. Well, I don't want to mess around with price down in here. Sure, if we get a spike up in here toward resistance in the daily zone and resistance in the weekly zone, that's a place to start looking for shorts. But down in here, betting on it going down, I certainly don't want to buy here because I'd be buying against what I perceive to be strong weekly resistance and strong daily resistance. So that's why I don't want to buy and say, well, why don't I short here? Well, because right now, we're still in daily support. I want this to either start breaking or look to get short, up in here. So I think equities are dangerous in this zone, which is what we've been seeing, last week, for the majority of the week, except for that unexpected short squeeze on Monday. But look at the ES here. I mean, look at this. This is the last 5 trading days. 1, 2, 3, 4, 5. That was MLK day. But still, I mean, this is just a big bag of excrement that we want to stay away from if we can help it, right? And, you know, crude was kind of similar. I did take that crude trade just because, you know, that I thought there was a chance we could have continued to trend up. We waited for a little bit of a pullback. And I thought with the war situation, you know, there was more of like a war trade. I thought, you know, we had good patterns. We had some good support. I thought it could take advantage of the war situation, maybe escalating heading into the weekend. But now that I saw that we couldn't even do that, and I mean, just look at the weekly chart here on crude for the last 2 months. Look at this. I mean, and the daily, you know, just fail, you know. So we're just, I think this is what we're seeing with crude. We're just stuck between these cross currents of, you know, money coming in because of the potential of something crazy happening with the Yemen situation, but also money is flowing out because we are seeing a stronger dollar. We're seeing signs of, you know, liquidity breaking down. So I think that's why, you know, those markets, especially silver, crude and gold, are harder to trade right now. Hope that makes sense. So back to the hourly. Any questions, Stephen? Does that make sense? Okay, so here's the hourly ES here. Not going to do anything at 8, like I said, because we're not in a smart zone from my perspective to take action. And again, all this is from my perspective. Okay, I'm glad it makes sense. All this is from my perspective and how I like to trade. You know, there are virtually unlimited ways to trade. Some people scalp, some people, you know, do this or do that, whatever. I'm here to trade how I trade, and I'm just, you know, looking for what I perceive to be, you know, high quality setups in zones of the daily, weekly charts that make sense according to Owings market analysis. So that's why with the ES here at 8 a.m., not going to do anything. Here's the NASDAQ. Just looking at got like so many screen. I've got like a spaceship. I bought a new screen because I just need more real estate with the streaming stuff. So now I got 4 screens to keep track of. It's just all over the place, but I'll get there. I'm used to 3, but I don't know. This is helpful with 4. All right, so the NASDAQ, yeah, you see we're already sucking up out of the daily extension there. So not a good place to get long or short here right now on the NASDAQ. Let's look at the Dow. Same thing on the Dow. I mean, look at the Dow for the last, geez, 1, 2, 3, 4, 5 weeks on the Dow. I mean, check this out. That's the weekly of the Dow. I mean, ever since you had that big push up back in early mid-December here, this is just excrement. Well, wait, they may want to, you know, test a little higher. Who knows? But right now the forecast is down, but we need to wait for, you know, confirmation. We need to see if the forecast is down. Seems like ES should break through. Yeah, it should break through support or resistance, one or the other. But that's the thing. Like, it's better to just let it show its cards, right? And then, therefore, we don't even need to, you know, we don't have to. That's the beautiful thing about what I'm doing and, you know, the stream here is that we have all these markets. So we don't need to focus on the ones that we're waiting for. We can just, you know, wait on those and focus on the ones that are active right now, right? Which to me are bonds and metals. Look pretty good. Yeah, your 4 screens, nice. Yeah, it's nice with the real estate. I got to set mine up kind of like in a special way as well, because I have a standing desk because I'm working, you know, I'm studying and doing stuff all the time on the charts, and I hate sitting. So I have it standing. So then I have to have like different desks for different levels. I'll send you a picture sometimes. Pretty funny. It looks like a spaceship. And then I got the big fake sunlight lamp for the Swedish winter. All right. Okay. So this is the Dow, and the Dow. Yeah, we're not doing anything with the Dow. The Russ. What do you like today, Stephen? How does my analysis sound to you? You liking bonds and metals from the short side? Here's the Russ. Now the Russ is the only one I mean, if we just get a big pop on the Russ today, I would just be all over that because the weekly is different. You see the weekly on the Russell 2000 here? This is a lot different. You see, we're already, you know, we never made the push back up here to the dot zone. We're rolling over already. And the daily here on the Russell, you can really see the daily is just hanging on for dear life here. It's about, you know, it's we're leaking lower. We're technically trending down on the Russell. We're just not, really making new lows yet. But according to OMA, we are trending. You got 3 consecutive closes underneath the middle of the moving average envelope here. So, but I'm going to wait. The Russ, they may want to be sneaky and pop up here again. I'll tell you what, if we get a good sell pattern on close up here tonight, that'll be a potential swing trade for me, but let's wait and see where they close. Anyways, the Russ is still my favorite for the short, and that's not just based on the fundamentals and all those companies, being subject to higher rates, going to get more affected by higher rates, but the charts are showing that as well, so it's really important. Well, that's really just an individualized thing, like I'm using OMA for, the way I like to trade it, which is I'm looking at a lot of different markets, and I'm looking for, when the very best setups jump out at me, I know them, I see them, I act on them, and I like to take them, when the whole market makes sense to me. I'm not really a system kind of guy. I don't have that personality. I'm not an engineer. So having obviously I have my, my setups and my strategies and all that, but I'm more of a discretionary trader with I've got, the word rules, I don't have rules, but for somebody who is more, engineering minded and likes rules and likes to just, kind of follow a plan, then for sure, the Dow could have been good for weekly congestion. Absolutely. We can go over that in a sec, Stephen, but yeah, so that's how it's just, depending on personality preferences, right? So I like to be, I don't mind, I try and keep my losses small, but what I try and do is when I see something I really like, and I know I'm using these terms, loosely, you never know anything. But when I feel I have a very high chance of I'm in a trade and it looks like it's correct and it looks like it's got some juice behind it, that's when I'll start adding. And so therefore, you get one winner where you add several contracts at different stages and really let it run. That's where the majority of my profits come from, because that's the way I like to trade. And as a result, I'm able to sort of maximize my winners when I get into that position, as you'll see on the channel as we're here for, the foreseeable future together. But, trading a system like congestion on the Dow, that's across all these markets, right? If you employed the weekly congestion plan, you could do it across all these markets. I don't want to say trading is never easy, but that's an easier way to trade, because you could structure some rules around that. And as long as you had a decent R factor of 2.5 to 1, I know that you'll make money with that plan, because it works, because it's logical, because the methodology makes sense, right? So we can go over that after the 8 a.m. check if we're not going to trade, because we're here, so we might as well. But here's the Russell. Nothing for the you said 1980-ish. Yeah, we'll check that in a sec. We got 10 minutes until 8 a.m. I want to make sure I don't miss anything on something that I actually might want to trade. So here are the 30-year Treasury bonds. Yeah, see the daily and the weekly, they look like they have more of a will, and the monthly looks better too on these as well. So they look like they have more of a willingness to drop today. We'll see if that ends up being right. But right now, on the 30-year, it would have to push back up in here. I'm not ready, because right now we're sitting right in weekly, daily support that, I'm kind of hoping causes a bounce and an opportunity to get short. I'll wait on that. Look at the ultra bonds here. Pretty similar to the 30-year. Just checking this. Give me a moment. Ideally, I'd love the ultra bonds up into the mid 129s, up basically. Here are the ultras, right? You see right there, you got the dot zone at the high connector. So mid 29s-ish. We'll see. The market's going to develop, but that's, where I'd like to try and get short, because there's still some support here, right? We don't want to get short into support that might hold and squeeze against us. And then we're like Warren Buffett says, our shorts are down and the tide's going out. That's not fun. So we want to avoid that if possible. All right, so ultras, nothing right now that's screaming that I have to take this trade. It's not, if we spiked up to, you know, 129, it wouldn't be a bad trade on the ultras, but it's just not great. I'm waiting. So gold, here you can see gold looking nice and weak today. You know, you see we're trending down nicely on the hourly here. I'm not going to short that, but if we got a pullback, you know, gold can get a little wild. There's a lot of resistance there. 2047, 2051, 2052. So waiting for gold to come back to us a little bit. Silver here. Kind of up into 23.32 for silver. I think we could see a nice drop in silver today. I really do. I think the metals could be wonderful today from the short side if bonds continue to head lower and rates, you know, are pushing higher and the dollar maintains its strength. I think we could see some really good action in the metals complex today. I said gold, remember, I'm going to stay away from, but silver, definitely a little spike up into 23.30, 23.32 would be awesome. Let's look at copper. Yeah, so copper was a good one during London. I didn't take it because I don't trade London, but I saw this. This was kind of the zone here. I like copper up into that high there. There's a lot of resistance up in there. You've got a nice, you know, potential resistance pocket pattern on the daily there. So up into that double top area there on the hourly for copper potentially. Let's look at platinum. Platinum also looks very weak today, as you can see. There's the hourly just firing to the downside. So got a lot of resistance on platinum up into 917, 918. Are we going to get there? I don't know, but we'll get something on one of these. So a lot more clear this heading into this week than last week. That's the good news. As I said with crude here, not interested really for the day unless I see something that just jumps out at me. Natural gas is the same. Covered this in the pre-market, in the members area. Not nuts about natural gas. Let's check the euro dollar, because this is dollar. Here you can see, I mean, look at this. You see, I think the dollar is getting stronger here against the euro and leading the way for congestion exit down on the daily. That's what it looks like. So that's why I think bonds, metals, the indices are going to ultimately follow. Especially if we can get a nice solid close down here today, break these extensions, break these lows, that'd be fantastic. So we'll see. Yeah, so probably not looking like I'm going to do anything at 8 a.m. The most interesting one, I'm just going to wait for these to... Bonds are, it's not a bad pattern here, but there are better ones that I'm going to wait for. So I think that's good for the 8 a.m. check. Nothing I'm seeing that I'm crazy about. So you said Russell short at 1980. Let me see here. Yeah, for sure. Anywhere up into that pocket right there. Yeah, definitely. You've got that live pocket resistance. You've got the extension backing it up. I mean, you got a lot of resistance up in there for sure. Let's see if we can get a rally. All I know is I don't want to go long stocks here, and I don't want to go short into support. So you got to keep an eye. These things can move. Here's the 30-year. There's a lot of resistance on the 30-year up into, you know, right in here, 122.13. So I think if we do get up there on the 30-year, I might have to take a little action. So I better get ready for that just in case. because we don't want to be too timid either. And the 30-year does have, you know, there's some potentially decent resistance jumping out at us at 122.13, which is right at this extension here. You see, so we got about 3 minutes to go. You see this, Steven, here? That extension, that high. There's still a lot of resistance up there potentially. So I'm you know, kind of interested in that general area. Still, most of the volume right now has come in at about 122.4 down in here. So I can see why it failed here during London. On a volume came up in there on the volume profile. So I'd want to see, we'd have to, if we jumped up here, we'd have to see some volume coming in. So the 30 years, it's kind of the one that I would be most interested potentially for 8 o'clock. So I want to keep an eye on it because, you know, the hourly closes anywhere in here. If the 15-minute wants to jump up and challenge all that and get rejected, I need to be ready to short. So keep an eye on the 30-year bond for a potential short up into 122.13. Let me get my YouTube chat open again. I need 5 screens because I don't have any place to put another screen. Hang it from the ceiling. Any questions there, Stephen? Okay, you can see the 30-year is trying to push, and I do like that 122.13 area. So let's keep an eye on this. We might be ready to short 30-year here. But we're going to let the 15-minute here to the right, you know, confirm for us, because the 15-minute here, if we're going to see resistance up here at this high on the 30-year, there's a lot of reasons I like this level. Nice OMA pattern up there. You've got a lot of resistance up there at 122.13 really is the line in the sand. So let's see. This is going to close. All right, it closed already. So we're at the 8 o'clock hour. So the next tick, you know, you'll see the new hourly, the new 15-minute bar open. So just a little bit of the reason I'm not being super aggressive, just shorting right now, is because of what I'm seeing on the volume profile. So there was quite a bit of volume that came in right there. That was good. So I'm probably going to try and short. I might set an order at 13 with a stop at 16. So it's 3 ticks. And if I lose 3 ticks, fine. So I'm going to go ahead and do that. I'm going to set an order to short 13 here on the 30-year. With a stop. I'll put it at 17 for now, just a little bit higher. All right, so that order to short the 30-year at 122.13 is in. May or may not push up there. You can see that gap down there on that 15-minute close. We gap down and below the true average in the low connector. You can see right here. But see, I'm basing the trade on where my risk, that's a lot of resistance right there at 10, but I'm basing it on where my stop needs to go, and my stop really needs to be 16, 17. So then I have to ask myself, you know, if I hit the bid down here at 9, my stop, that doesn't change where my stop needs to be, right? So I'm always looking at the R factor. Even though I don't have fixed profits, I know where my stop generally needs to be, and I know on average what I'll make on a 30-year, you know, treasury bond trade. So that's why I'm not, you know, just jumping in down here. It might drop without us. That could happen, but it doesn't work for me from a risk reward standpoint. What about you, Steven? Does it work for you? What are you seeing on the 30 years? we gotta get some good stuff going today. It was a slow week last week. Very, very boring. Kind of like watching paint dry the whole week. Do some stretching while we wait. So my order is in there at 13. There are enough reasons up there to have that order that if it fills me and blows through and gives me a 3 or 4 tick stop, that's fine. I've only got one contract right now as well, sitting up there. So, you know, I want to see if it fills that first contract and then drops and it looks like we're in a good position. We can always add the second contract. If it starts trending down and we find we're in, you know, profit on the first 2 contracts, we can add a third or a fourth contract. So I'm just going to start out with a 1 contract at that limit order short for the 30-year. And again, I've got my order at 122.13. And again, see the risk disclaimer, educational purposes, all that good stuff. I trust you guys, you know, make all your own decisions. Yeah, bonds are, I like bonds. They move differently. It's hard to say, but to me, they just move a bit more true than, you know, the indices, right? The indices, I'm sure there are algos in the bonds, but because there's just not the same kind of, you know, volatility, intra-bar volatility in bonds, it just, I don't know, it feels like a little bit more of a reliable market. You know, on the indices, you can still pick a good level, and, you know, there's just so many algos fighting it out at every level that, like, the indices make you sweat a lot more, even when you're right? Whereas bonds, when you're right, they tend to go and not look back, typically. But the ultra bond will be a bit more wild than the 30-year. The 30-year will have a little bit more volatility than the 10-year. I don't really trade the 10-year unless there's a news announcement and I want something thicker. But really the 30-year and the ultra bond, they're nice instruments. I mean, I've gone through periods where I've traded them exclusively because I just love the way they move. I think you'll like them as you, you know, learn to, you know, you learn when you see how they move, and they're just kind of a comfortable market. And what's nice about the bonds is that you've got the highest tick to commission rate, right? So on the 30-year here, you know, it's whatever, 31.50. I always forget without commissions, whatever. It's right around $31.50. And, you know, the commission, if you're looking at, you know, right around $3 round turn, that's a really good, you know, each tick compared to what your commission costs on the trade is fantastic. Or if you look at like the NASDAQ, you know, each tick is $5, or the Dow, each tick is $5. So this has a really good high tick value. I like it for that reason too. How do you like the blue with the white text for the streaming frame, Steven? I like it better. It's just a little less, the word I'm looking for. I don't know. I think it just looks more clean. So 30-year is dropping. Which is nice to see. And there it gets sucked back up. You know, you just never know. Like, this thing could, the 15-minute here, we're still trending up, right? I've still got my order in there. I'll let you know if I cancel it or anything. But for now, the order is in because I do like that level up there. And the 15-minute here, you know, we don't know. It's still trending up. We don't know where this is going to close. But if it closes like that, you know, in 7 or 8 minutes, you could see the next 15-minute bar, excuse me, up into that pocket, you know, and then that's where our order is. That's where all that resistance is. So that's where I'm willing to give it a shot. Yeah, blue with white, less loud. Exactly. I think that's a bit more, it's a little bit more in line with what we're doing here. It's not going to be as loud. We're not like these other channels where we're the self-proclaimed best traders on YouTube. Funny, there's a guy that's the best trader on YouTube. I don't think he knows who's on YouTube. I'm not talking about me. I'm talking about, you know, Tom Hugard. He's on YouTube. The guy trades massive size. All right, so the order's in for the bonds. We're hanging out. We're waiting. See. Take a look at. Let's take a look at the ultra bond. Yeah, I think we're, and that's the other thing too. You know, I think we're headed. I think we're headed down south now for the winter on the bonds. Probably the hourly is probably headed cycling back down to these lows here. So any kind of a 15-minute pullback, I'm going to go ahead and just pull that order for now because we may have to re-enter, or we may have to enter at market lower. I'm just pulling those. So no order for the time being. I still like bonds. I just want to see if we get, there's a lot of volatility that comes into bonds at 820 when the floor used to open. So I want to watch carefully, and if they spike back up, like if ultras, I mean, ultras have the same pattern here as the 30-year. So I like the ultras better. You get more bang for the buck. So I'm going to switch the symbol to the ultra bond. Even though the pattern was a little bit better on the 30-year, the ultra bond's going to do the exact same thing as the 30-year. So it doesn't really matter. I prefer to trade the ultra bond because if you're in and you're right, it'll move further. And the reason is, you see here, Stephen, if you look at the 30-year bond, it's currently trading at 122 and 6/32, whereas the ultra bond is trading at 128 and 22/32. So, it'll just move more. If you're in a winning trade and the 30-year moves 6 ticks or 7 ticks, the ultra can move, 12 ticks. So might as well collect that extra money if you can. So the bonds is definitely the hourly, and as I get into the flow here of doing the channel and doing all this live, the bonds are the smart pick for this hour. We've got a nice pattern on the hourly. It's in line with what we're seeing on the daily. Dollar's getting stronger. A lot of resistance here on the ultras at 128.26, 128.27. On the 30-year, we had that resistance up there at 122.13. So I'm liking bonds for this hour. The only problem with bonds that I can see right out the top of it here is that we've been consolidating down here near the low, the low end of value on the monthly chart, and that's, statistically, that's kind of a dangerous place to go short. So just keep that in mind as well. Where we are, that's the ultra bond, but where are we on the 30-year? Yeah, the 30-year, that's probably why I like the 30-year better. We haven't reached the lower end of the monthly value area yet. Regardless, they're both going to pretty much do the same thing, so. Yeah, I do like, bonds are, bonds and the metals are really the, should be the primary focus every day, from about 8 to 10, and then stocks kind of join them. You can get a good stock trade as well at 8 or 9, but, stocks, the first really good one is usually that 10 a.m. close after the open, because that opening volume has settled in the market, and sometimes you get a really good pattern on stocks into that 10 a.m. Close. So bonds and metals are good for the pre-market for stocks. They tend to move nicely. And since I didn't see anything that I wanted to short on metals for this hour, the bonds just happen to have a nice pattern here. And I gotta work on my speed with the live streaming and managing everything and flipping through, because when I'm just doing this by myself, I'm just able to just cycle through, obviously, because I'm not commenting, I'm not flipping back and forth with, the YouTube thing. So, on this one, when I was watching the 30-year, which is here, that was the one I was, most interested in, but sort of, I should have probably checked the ultra bond right after that, because the ultra bond gave a little bit of a better exhaust pattern on the 15-minute chart. You see this here? There's a nice 2-bar push right here. 1, 2. These are the 2 bars on the 2-bar push. And when you get that 2-bar push, is one of the things I like, Stephen. You get that combo into the 2-bar push. I mean, that's a nice 15-minute exhaust for a potential reversal into that hourly resistance zone. So I got to just be a bit quicker, so I don't. If I'm interested in one market like the 30 and I've got an order there, I got to remember to go over to the ultras because, you know, it might be ready to hit the bid. And I'm not sitting around sucking my thumb waiting for the 30-year. But I counted on this, you know, starting streaming the first couple of weeks, just not put a lot of pressure on myself in terms of like figuring out how to deal with everything, because it adds a whole new aspect to the trading when you're commenting and teaching and, you know, going over stuff, which I really enjoy. That's why I'm doing it. But it's also going to take me some time to adjust my own trading to that so I don't miss opportunities. I think ultimately I'll be able to do it all where I'm able to process everything that's going on in the chat and with the YouTube thingy and make sure I don't miss trades. It'll come. It's just a skill that needs to be learned. Well, on ZB, yeah, I would be basically stop number 1 would be that congestion low on the hourly down in here. But I wouldn't have a target in because I don't like to have targets. I like to, you know, wait and see how far it wants to go. And the way that we can do that is, you know, you can just watch the 15-minute chart here. So, I mean, what do you think, Stephen? If you were short the 30-year here, you know, what would you want to see from the 15-minute chart? On the daily, let me just check. Yeah, I mean, you got a lot of support basically right here where we're at. 122.7, 122.8. And on the weekly. So you do have some support here for sure. So it's something you got to be aware of. But the hourly pattern, you know, looked so good. That's why I was willing to take the trade where it is, because it's, even though it's in daily and weekly support, ultimately I do expect daily and weekly support to break. So if I do get a good hourly pattern, you know, then I'll give it a shot. So like on a trade like this, for example, I mean, the ZB I wouldn't have been in on because it didn't fill my entry, but let's just look at the Ultra Bond because that's one I actually would have taken at market had I seen it. So for example, on this one here, on the Ultra Bonds, if I had shorted here, let's say you hit the bid at 27, right? Right now, my stop would just be at break even because, you know, if that daily and weekly support ends up being strong, you know, you don't want to lose on this trade now that you've been up 5 or 6 ticks. So the stop would be up here at break even about 27, and sometimes that gets hit, sometimes it doesn't. But you can also catch a runner because if that daily and weekly support break, you know, off you go to the downside. So, but the fact, what I wouldn't want to see here is, do you see how on that 15-minute chart you sucked back up and you're still trending up here? Doesn't mean we won't drop, but it also means that we could actually end up, you know, pushing higher. It's a possibility. So you'll learn this based on your strategy. I mean, for the way I like to trade, when I'm in a good one, you know, the volatility, it's not, if I pick a good one, it's obviously I don't move the market, right? So the big money's moving the market. You never know when they're going to step in. You can get clues and things, but when you're in a trade and you see, you know, if you're short and you see some violent selling coming in, you know, pretty much immediately, those are the ones that end up going hard and fast, that you can have confidence. You can get clues. If a trade starts out slow and kind of is not doing anything, it just tells you like, okay, you've picked an area where for now, there's just not a lot of interest in this area. And, you know, sometimes you'll still be right, sometimes you won't be, but it's, these little things are things to take note of, especially when you're day trading, right? When you're swing trading, it doesn't really, you know, matter. Yeah, there's definitely, you know, a lot of support here, but I'm expecting it to break. That doesn't mean we won't get a rally first. We might. But we got to take the shot like we did here. Well, we didn't get in, but had we got in, and then once you're in, you say, okay, well, I'm in. And now because of all that daily, weekly support, stop is at break even. And let's just see if you can catch a runner, great. Otherwise you break even. 122.2. Yeah, certainly. I mean, that's the lower end of that congestion range there on 122.2, definitely. So that would be like the first logical, target area. Yeah, I mean, and you'll see that it's good that you're noticing these things for sure. And it's just, you'll learn over time, like just kind of putting them into context. So, there are, it's good when you're short and you're below that true average like we are, like you mentioned. That's definitely good. But also, do you see how that 15-minute chart there on ZB, there's something really important that happened here, which is telling you that there's more support than maybe we think at the middle of the moving average envelope there on the hourly. And that is, you see that shallow extension that held on close. And we also got to close above the middle of the moving average envelope here on the 15-minute, right? Which means if that hourly pattern is going to be, strong and really push us to the downside, the 15 minutes got to go for congestion entrance down. It might. That's what we're betting on. But so far it hasn't. It tried right there, but it didn't. So just, a lot of these little things. But yeah, definitely it's a good pattern on the hourly. And I'm still interested in this. Like I said, if on the ultra bonds or the 30-year, if we popped up here a little bit and challenged some of these extensions on the 15, I'd be interested. Oh, here you go. It's 820. So here comes your liquidity. You'll see here the bonds, they get a little jumpy at 820 because you get some volume coming in. You can just see them kind of jumping around a little bit there. Yeah, definitely. Those are very fun and interesting to watch. You can gain a lot of clues from seeing how those are developing. Because when they're live, they're there in that moment, but they may not necessarily be there by the time the bar closed because the structure of the bar has changed those lines, right? So talk about an edge. You can hit it while that trend line is valid, and then by the end of the bar, the trend line is not even there. I mean, platinum is weak. I'm waiting to short today, but it needs to give a little bit of a bounce. How much it's going to bounce, I don't know, but certainly the hourly is in a really nice trend run to the downside now. So I don't know, up around 916. For right now, that level might change throughout the day. I mean, platinum is just falling out of bed right now. You got to look at this level here on the daily, Steven. You see all that support, and if all that breaks, look out. We've got I think it's going to be, it's just what I was starting to feel there toward the end of Friday when I was getting ready for Short City. We're there today. It's looking good. Now we just got to wait and try and find some good entries. So yeah, platinum I'm just waiting on. bonds are the one I really like. There you go. So look, the 30 years at 122, it's at your first target area, 122 slash, 0102. So that was one where, yeah, by setting the order on the 30 year, I missed the entry. And I wish I just would have been a little bit faster over the ultra bond, because that was the one that was telling you more so to go in at market. And then, you have a nice winner on your hands. So that's those are the kind of trades we're looking for, like that, where you just manage it objectively. In this one, the ultra bonds, if you would have got short at market there, and then as it dropped there, you'd be saying to yourself, okay, I still like everything I'm seeing, but 15-minute didn't enter congestion yet, but it might move the stop to break even right here. Comes back and hits me, no big deal. I got a free trade on, but I'm going to let it roll. And stuff like this happens. So it's just a matter of like putting yourself in a good position, right? If you just continually try and put yourself in a good position, you take the losses, you get whacked from time to time, but you just keep putting yourself in a good position and good things happen. That's the way I like to look at it. And we were close to putting ourselves in a good position here. It was, these are the subtleties. And some people, back to different personalities and things like that, right? I mean, if I see that I need to be in on the hourly, in this case for the ultras at 128.26, by the time it's down to 128.23, it's not in me to be like, okay, I'm just going to get in down here. I just don't do that. Some people, they'll be very aggressive and look at that and go, I'm, getting in. Great. I mean, as long as they're just consistent in their approach. That's the key. So now if we start to, we're trying to break to the downside here on bonds. See, this is the area now where, on the hourly here, you've got a lot of support right here on the 30 year. So it'll be interesting to see. It'd probably be my target right here on the 30 year would be, it would really depend on this 15-minute close here in 5 minutes. And those are more, you got to use all the tools at your disposal for stops, for targets. But ultimately too, there's a lot of it's just personality and experience, and there's just a lot of, that's why trading is not black and white, no matter how much people want it to be. Doesn't mean you can't develop systems, but even those systems, you got to import the variables into. And those variables will change over time because the market changes. You can see you got a lot of support here at 128. See, these are the kind of setups we're looking for. That was nice. Ultra bonds were kind of the one we missed, because the 30 year, I can't do anything about that. It just didn't go to my entry, no big deal. But the ultra bonds kind of were right at the entry. So gold dropping nicely. So it looks like the forecast for the day is intact. Everything's kind of so far behaving as it was expected to behave. Check in on the dollar. Yeah, dollar strong now here against the euro. If we can get going below 109, that'd be nice. Yeah, stocks I'm just not even going to pay attention to, because that's one thing too, when I'm streaming, I got to make sure that I don't lose my focus, so I can stay on the markets that I'm really interested during that period of time, which right now are definitely the bonds. But that's one thing too. Now the trade is, pretty much over for me. I've learned over the years that, because I used to make this mistake, back to learning from, journaling when you're first doing it for the first few years, whenever a trade like this would go without me, and then, you know, let's say my entry just didn't get triggered or whatever, and it would make it down to where I thought, you know, hey, there was like a decent target zone. When it comes back to where I would have originally entered and I enter, I've noticed that, you know, you just don't have the same kind of probability on that trade. It may go back down again, but now you're coming out of all that support, right? So I don't, as a matter of personal preference, like now that we reach the hypothetical target area for bonds, if this thing spiked all the way back up to my original entry area, I wouldn't get in because the trade is over. It's already played out. That makes sense to you? And I'm not saying that's, you know, ultimately right or wrong. It's just the way what I've noticed with my own trading. Dixie Platinum. I mean, if we can get a nice pullback on Platinum anywhere up into 916, 917, that'd be fantastic. Copper, I already pointed that out, but yeah, definitely anywhere up in here would be great for copper. 3.7880 up in there. Silver, I mean, silver's one of my favorite markets to, especially from the well, from both sides really, but I don't know why I like shorting silver. I like longing physical silver, but I like shorting paper silver. Maybe because it's fake. I'm not sure. I think silver's looking, it's here on the daily. You see what I like about silver. These are just the subtleties. Sometimes I don't explain it because it doesn't occur to me. I see so much that I don't explain, right? Because I'm not used to doing this live. But the reason that I like silver better is because we're up. You see, we're coming out of the daily resistance area, right, in congestion. So I think we got a good bit to go here until we hit these support levels down here, right? So with silver, the train is basically left the station now. It's leaving the station, and therefore, you know, it can be more, you know, slightly more aggressive on shorting silver. So I want to see if so there's 830 right there. I think there was a Canadian inflation announcement coming out at 8:30. So not a US announcement, but Canadian, our good friends to the north. And you can see there's a little bit of volatility coming in here at 8:30 on the back of that Canadian inflation, which is great because, you know, if we can get a spike on silver, my God, if this hourly close would manage to get up here to 23.30, would potentially be a good spot to short silver. Let's see how the indices are reacting to Canadian inflation. Not doing a whole lot. Let's see how the ultra bond. Yeah. It seems like it was gold and silver kind of reacting to that inflation number. Hopefully it doesn't change the chart, so hopefully it just causes some kind of a bounce. Platinum was rallying a little bit. Yeah, trying to. Copper. And that's really the goal for, you said yes, I like that too, yeah. The goal for me on every day is, you know, I always have to remind myself, and then especially streaming, you know, because there's more pressure to put on trades and do stuff. You got to maintain, you know, you got to be true to yourself in terms of your own trading, even when you're streaming. And for me, I'm just looking for, you know, those 1 or 2 really high probability setups per day that maybe give me the opportunity, you know, to pyramid on the 15-minute chart if I'm in a good trade on the hourly. Because if you do that and you do it a few times a week, you know, it doesn't take more than that to do very well. Like I said, that'll pay for some losses. But if you're selective, you know, hopefully you don't have as many losses. It's a lot easier to, you know, do damage to yourself and your account when you start just taking subpar trades, over trading. That's just one thing for me over the years that I've learned, is that it's just quality, quality, quality. It's not about quantity. In fact, quantity with commissions and what it does to your psychology and the amount of concentration it takes to scalp. That's why I'm so against scalping and all these other things. It's not that there aren't people who can't scalp. Of course, some people can do it, but the odds are that you're not one of them. The odds are that we're all not one of them, right? So there are much easier, trading is not easy, but there are much easier ways to make money in trading than scalping. In fact, scalping, I think, is the hardest and, just generally dumbest way to try and make a consistent living in trading, because it's just, the odds are against you in every single way. And that's why I'm sort of the opposite. I'm just really focused on trying to find the highest quality setups that I can. And oftentimes that means just sitting and waiting. And, back to the live streaming, when you're doing it by yourself, if I'm in my office, just sitting and waiting for trades all day, which is how I trade, I'll run away and, go make a cup of coffee and come back and go chat with my wife and, go outside and stretch my legs, even though it's minus 15 degrees Celsius here today. But, when you're streaming, it's just a little bit of a different, it's practically a little bit different. So I got to just kind of continue to get used to that. But all good things in due time. So here we got silver. I mean, yeah, I'm definitely loving. If silver can test 23, 30, this whole area, and hold up in here, especially on the hourly. I want to see where this hourly closes in 25 minutes, but we just got a lot of potential resistance up in here. So let's see how it reacts. We'll get a good taste right now of how it reacts to this level before this hourly closes. Just looking at the volume profile over here, it's still, yeah, so far there's not a lot of volume coming at this level. So if it's heading higher on no volume, that's, that's a sign that resistance is going to fail. But, we still have time to think about this trade. That's what's nice too. It's, I just waiting for the hourly closes, we're just waiting. It's a very, I don't want to say stress-free. Trading is never stress-free, but it's a more anchored, sort of relaxed way to trade and just follow the markets. And when you're following all the major futures markets, then you have, on an hourly basis, you can really plan your trades out. And I find that it's another thing too, I'm kind of ranting here, but why not? It's a Monday rant, good time for a rant. People that are over trading and scalping, that's also one of the hardest things about ever getting better, is that if you take like 100 trades a day or 50 trades a day, how in the hell are you going to catalog all those and go? I mean, really, is someone really going to go back and like look at all 50 of those entries and exits and try and pick them apart and learn? I mean, it's really difficult to, try and review and get better when you're taking that, number of trades per day. Whereas if you're taking, a few trades a day or whatever, it's a lot easier to, take 20 minutes at the end of the day and go back and look at those and ask yourself, what did you do right? What did you do wrong? What could you have done better? These types of things. So how many trades a day, Steven, did you take, before you started hanging out here? I think you told me, right? You've kind of been a lot better about just patiently waiting, right? I'm curious to know how many trades you used to think was sort of normal and what you're sort of developing into now in terms of what you're thinking is a normal number of trades per day. All right, well, yeah, you like the pullback on SI. Yeah, I'm loving that pullback on SI. There'd have to be some, still not a lot of volume up there right now. Again, back to specific trade setups. I like trade setups where, generally speaking, volume is coming in, because that's where you usually see some sort of a struggle where people are trying to, let's say, push it long. But if you see if you see the price trying to uptick in an area where you want to get short, and you see a bunch of volume coming in at that level on the volume profile, that means somebody's absorbing that. That's what I like, because as it starts to drop back down, all those people who tried to push it up are going to bail on their positions, and that's going to be the fuel for the move to the downside. I mean, that's sort of a perfect scenario, but those are the scenarios that I prefer to wait for. And the way I do that is by looking at the various volume profiles to see, I like the trade now, and now how does it look on the volume profile? It's, it's back to also being more of an art you learn sort of over time. Like sometimes I'll override, you know, if I see something I really like on my OMA and I want to get short, but the volume profile is not really confirming, sometimes I'll still just go in, and sometimes it works and sometimes it doesn't, right? But hopefully over time you learn, you know, you learn that you can trust yourself, because you know that out of 10 times you do that, you know, you'll be right on, you'll have a positive result on 5 of them, and you'll make a lot more on those 5 than you lose on the 5 that you lost on. You can see we're getting rejected out of that. We got close to 2330. Even though still not enough volume for my liking, but I would love us. This is what's nice about the hourly too. You can just plan your trade out. So for me, you know, there's a lot of support right here as well at 2320. You know, we've got the monthly point of control right at 2318, right? So just imagine the most heavily traded price for this month right now on silver is basically right in here at 2318 right here, right? So that's right now, that's some support, right? But we've got a ton of resistance up into 2328. I think ultimately that resistance is going to win. That's my bet, right now anyways. And but still, if this is where you got your resistance here, and this is where you've got temporary strong support, you see if silver's, you know, closes down in here on this hour, you don't want to just short here, because you're shorting into support, and where you can help it, you don't want to short into support. You want to say, okay, where's my resistance level? In this case, it's up here. That's where I'm willing to get short. So that's the same thing as the, you know, the 30-year trade that unfortunately didn't fill my order. Otherwise, we would have got off to a good start there. But, you know, I wanted to short here. I put my order there, you recall, at 122.13 on the 30-year Treasury bond, and it just didn't go up there. But the reason for that is because we still had some support here, and I didn't want to short into the support area. I want to see if it goes up and tags me in resistance. And the price to pay for that is that sometimes you'll miss trades, and you just got to be okay with that. Like, I think that's one of the biggest things, is that when you've been doing it long enough, you realize that there's just no such thing as perfection in trading, in life really, or in trading. But I think you'll see that when you listen to a lot of these interviews of market wizards and, you know, really successful traders who have been at it for a long time. A lot of them are just very humble and because they've, and as good as they are at their craft, they know more than anyone. You can't look for perfection in this game, and you've got to just kind of, you know, just roll from one thing to the next. That's your best chance of, and that long-term success, and that helps you to not get FOMO and all these other, you know, problems that lead to failure. All right, so the bonds are bouncing a little bit, which is great, because maybe silver will catch a little bit of a bid as well. We got 20 minutes until our next key decision. So for the 8 o'clock hour, you know, a little bit of a review for the 8 o'clock hour. I'm happy with the fact that we picked bonds. They worked out well from the short side as we wanted. Unfortunately, wasn't able to capitalize, didn't get my order filled, but anyways, was following the plan and was a good short. So happy about that. Stocks were waiting. Now bonds for the 9 o'clock hour. I'm not seeing a pattern here at all on the hourly, so bonds will not be in play for me for the 9 o'clock hour. But metals, see, this is when you really get in the flow, and you, like, a lot of weeks are like this. You start, you know, shifting from one hour to the next, and you can see the markets where you know, have the edge according to your methodology. For me, it's my OMA, when you have the edge for that hour. So right now I can see we're looking at gold. As I said for in the pre-market in the members area, I said for gold, I'm not, you know, I'm just going to stay away from gold today. God help me, because I know it's going to get flows from the Yemen war, safety flows. But I also know it's going to be hammered down from the strong dollar, right? And I'd rather be in a market like silver or copper that is going to benefit, you know, copper not at all, silver a lot less from the war flows, but still get hammered from the strong dollar. So that's why, you know, gold is one. You're coming up to a massive amount of resistance here on gold, but that's, you know, for me, silver is the one I'm more interested in. So here's silver. I think silver might be our pick here for the 9 o'clock hour. It's a big contract, so, you know, by 10 o'clock, we're either going to be richer or poorer by about $1,000, which that'll be fun. So that'll be, oh wait, we got to see where this closes. So that'll be silver. I think that's my top pick at this exact moment. You know, copper is also looking like it's heading up into resistance, but I like the structure on silver better, and I can only watch one at a time. So right now, silver is what I like the best. This will get platinum. Platinum's also looking quite nice. It's, you know, remember what I said, Steven? I said up into 916-ish, right up in here, my resistance area for platinum. So I think platinum, you know, should be some resistance up in here. Let's see where it closes. But if I got to take platinum or silver, I'll go silver just because of the liquidity, and I understand silver better. I'll trade platinum. I like platinum. It moves nicely, but I like, you know, if I have to pick between silver and platinum, I'll take silver. So that's pretty much it. Let's check on the dollar heading into the 9 o'clock hour. Here's the euro US dollar futures. You see, we're rebounding a little bit off of, you guys see here in the daily, bring it over. The dollar just challenged, you know, that low there from, gosh, what was that, early last week, right? So of course you got an OMA extension there, but that'd be great if we could start pounding down and through that level. That would really weigh on the metals, and especially if bonds can drop and rates go up, the metals could have a tough day. But the good news is we know what we're waiting for. So I can tell you right now with silver, you know, this 23.32 level, I mean, this has got to hold for me on the hourly close. And I've got to see some volume coming in up there, or I'm not going to take it, you know? So this is how I like to filter the trades. Any questions? Oh, you answered the question. Cool, Steven. So when I started, I traded way too much, like around 40 to 50. Yeah, exactly. And now since you've been here for what, about a week now, and I think you agree, right? You're starting to see the value of like planning the trades and waiting and just trading way less. And, you know, think about it this way. If somebody trades, you know, 50 round turns a day, right? I mean, say you trade, a lot of people trade 50 NASDAQ round turns a day. I mean, at $3 a round turn, you know, you gotta make $150 on commissions. Now let's factor in, you know, that market moves so fast. You're going to be missing out on at least a tick or two of you know, spread. So that looks like a potential exhaust there on the 15-minute silver chart. You can see the resistance is coming in up there. Yeah, it's beautiful. Don't want to ramble and miss my silver short here, but I'm waiting to the hourly close anyways. If you factor in those commissions, right? So 50 trades, $3 per commission per round turn, that's 150. And then it's $5 a point, right? Sorry, a tick on that contract. So let's say you're missing, you're definitely hitting market, you know, if you're trading at market, which a lot of people on the NASDAQ do because it moves so fast, you got to get in, right? So you're probably missing out a tick of slippage each time you get in and out, right? That's another $10. So, you know, but you potentially, by taking that many trades a day on a market like the NASDAQ between slippage and commissions, you've almost got to beat, like you're starting every day with like a $400 negative balance. I mean, that's insane. Trading is challenging enough. You don't need to, you know, it's like fighting Mike Tyson with both hands behind your back. Wouldn't do too well fighting with both hands, let alone tied behind your back. You know, that's how I feel about over trading. Yeah, so silver is definitely reacting to that resistance level. Yeah, exactly. Keeping the drawdowns low is key, because if you can keep the drawdowns manageable, you know, it's key. Keeping the drawdowns manageable, you're not going to get all crazy and, you know, have all these emotional problems and psychological issues that can plague, you know, so many of us when we're first starting out. All right, so silver, I guess it could have been a good spot just to leave an order up there, but you guys know me, I like to work on the hourly closes. Because you just don't know. Like for me, waiting for the hourly close is just what I do, because you got to be consistent with something. And if I start trying to pick spots, you know, in between each hour on all these different markets, it's just way too much. And if I just let the hourly closes come to me, it'll come. Like on bonds, we had a really good one last hour on ultra bonds. That was definitely, like, see there, just closes right near the high of the hour. That's, you know, that's beautiful. So let's see. And if you look, if silver doesn't give it to us, maybe platinum will. So here's platinum. The platinum's not really up in our zone right now. Check copper. We're waiting. And that's the key thing too. Just, you got to know your zones and just let the market come to you, right? The second you start forcing things, that's why a lot of people, I'll probably do a video on this at some point for the channel, but trading psychology is, so much of those problems can be avoided by just, you know, having a decent methodology, like planning out your day, planning out your trades, wait for the trades to come to areas where you've predefined that you want to, you know, take action in. Don't overtrade. Don't trade too big. I mean, just a list of like, don't do these stupid things, and then you're not going to get all the trading psychology problems that a lot of people get, right? And believe me, I know all these things now because I was like everybody else. I wasn't different. I made all these mistakes in the beginning. And in the beginning, you know, the first couple of years of trading, you're really hard-headed, right? And you're like these rules, I know that people say not to do them, but they don't apply to me. We all think that when we're starting out, right? But eventually you just kind of learn, like, okay, if I'm going to really get good at this, you know, all these things that I've been hearing and not listening to, you know, people say them for a reason. And it's usually traders who have been around a lot longer than us, right? Like, I learned these things from traders who have been around a lot longer than me. And I didn't really start taking them seriously until I realized, oh, you know, I probably should kind of listen to these guys. You know, they know what they're doing. Steven said, planning trades, lower stress. Did I already read that? I might have, yeah, boost confidence. Yeah, I already read that. Yeah, definitely. It's just a much better way to go. Because again, imagine, you know, we get paid. I almost had dyslexia there. We get sit to paid and wait. No, we get paid to sit and wait. Imagine, you know, you're sitting in there, you're scalping the NASDAQ, you know, you're going nuts and you're going for like 4 ticks and, you know, all this craziness where you can just wait for 1 or 2 good setups a day. If you got the whole day, you patiently wait. And when you know you're on board, doesn't mean you're not going to have losses. You know, we had that loss on crude on Friday. Fine. But when you're on board, one of those that you know is like, okay, I waited for this. The confidence it can give you when you wait for a trade, it comes to you, you execute, and then it starts going your way hard and fast. The confidence that you have to add to that trade, I mean, you can make a lot of money on one trade, you know, if you let it run a little bit and add. But you can only do that if you had confidence, you know, and you know the exact reasons why you're taking that trade. That's so important. All right, 850. You got filled on silver at 23.32. Nice, Steven. Using my levels better than me. Just gonna have to eventually, Steven, I'll just send you one of my accounts. So as I'm rambling on, you just tell me, Andy, I put an order at 23.32 on your account. Be like, that's awesome. While I'm waiting for the hourly to close, you're making money for me. That's great. That's the thing too, that I think, like, once people actually understand what we're doing here, the channel's gonna, people are gonna realize, like, I don't have to just sit and wait for Andy to trade. Like, I can actually use this analysis because it's pretty reliable. And, you know, when calling out levels, have confidence in trading off of those levels, even though this is for educational purposes only. The levels themselves are very educational. Yeah, someday, exactly. One day. Sure would be easier. I've thought about that. It might be something in the future that I do, where just analyzing and be like, okay, order here, sell here. You know, having people on the DOMs would be awesome, to just be able to, like, call it out. Okay, pull that order, you know. I think Paul Tudor Jones does that. And you can understand why, because he's just constantly thinking about what he wants to do. He doesn't have time to go and execute it. All right, we got 8 minutes. Bit of stretching here. Let's see. Let's check. So here's the 30-year. We already said we're not interested in these. Let's check gold. I mean, gold's setting up for a pretty nice short here. Jeez. Oh, yeah, because silver's already dropped. Platinum's already dropped. I mean, gold's got a lot of resistance at 20. I mean, I'll tell you what, gold sometimes loves to be a dick on this particular pattern. Excuse my language, but sometimes gold does love, like everything else will be dropping and then you think gold's going to drop and you short it here. And then I know this because this has happened to me a couple times before, where you short and then it goes up here, right? And then it just gets slammed and closes back down and goes like this. And like, it just has to get those stops. Gold loves to get stops. So I see so much resistance on gold. Like there's a ton of resistance at 2047. Right in this area here. But I know I said I wasn't gonna trade gold today because of the cross flows. But if platinum and silver continue to drop, there is so much resistance for gold at 2051. Might have to we'll see where it closes, but that could be a good place to look to get short next on gold if we went up there. We may not, because there's two key levels for gold. One of them's here and the other one's at 2051. Oh yeah, gold. Yeah, gold's a tough market to trade. Gold and crude are tough markets to trade. They really are. I would say in order of, well, here I'll go on a rant in terms of the markets I think that are the easiest to trade. Steven, keep track of, like, make notes on 5-minute videos you think I should clip sometimes when I go on a rant. And then, you know, if you think it'll be helpful to people, I can just, after the live stream, I can cut them and put them into shorts and, you know, people can learn that way. But I think one of the good ones will be the hardest and easiest markets to trade, because I think that would be a video that people would enjoy and also learn from. Because it's not something I don't think a lot of people think about. All right, but let's just do the check here. So we know we're not trading bonds. Gold already dropping. Yeah, silver already dropping. Steven's looking good on his short from 23.32. Nice job, Steven. Once I get really comfortable with the streaming, we'll get, you know, on the OBS software, you know, I can get these special, I'll get like the Wolf of Wall Street guy, you know, Leo, like giving you the champagne toast when you do a good trade. We'll get sound effects and we'll work up to all that kind of fun stuff, because we do have to have a little fun while we're here. Copper, because I keep energy when I'm having fun. Yeah, copper's not setting up for a short like I like. Doesn't that also help, Steven, just to know what side of the market you want to trade from? I mean, imagine how many losses. I'm not saying we're right every day. We're obviously not. But, you know, 70% of the time, I would say I'm pretty much on the right side of the market, at least. Doesn't mean I, you know, can capitalize all the time. Absolutely not. But if you're going to be on the right side of the market more often than not, that also just helps. And you tell yourself, okay, I'm going to be very careful or not trade from the side of the market that I think is going to be weakest. You know, that can keep you out of so many losses, right? It's huge. All right, so here is copper. So my whole point with that rant is that, of course, we don't want to buy copper here. We're still waiting to short. I mean, if copper gave us just, you know, because copper will get wild sometimes. It'll just spike. If we got a spike to like 3.81 on copper, I mean, those are the trades I'm waiting for. I mean, over time you learn, like for me, I learned the trades where I just want to sell everything I own and go in on the trade. Obviously I don't do that. I never expose myself to too much risk, but that feeling that comes up when I want to do that on a trade, that's a trade I shouldn't pass up on, right? And those types of trades come along more often than you think. Those are the ones to wait for, because the other ones are just nickel and dime you to death. All right, here's platinum. Yeah, just getting slammed. No pattern, unfortunately. Let's look at the dollar. Yeah, look, dollar strong here. Beautiful. Oh, we're breaking through that daily support zone on the euro. Look, we're challenging 109's key level. We can get a close below here. That'd be awesome. I'm not even looking. I told you guys, we'll check the agriculturals maybe later. I mean, if we see something, but generally speaking, the higher time periods right now are a little bit of a mess after that crop report. All right, so it's 8:57 a.m. Let's check Bitcoin. Bitcoin and Ethereum are also a mess today, so not really messing with them. But still, I still got to get better. Like, even though I have my forecast coming into the day, you know, where I know the markets I want to take advantage of. I can't get lazy and not, like, especially on an hour like this hour. Like last hour we had bonds. That was a no-brainer. Focus on bonds. This hour we would have had silver, but it just dropped too fast. So now that there really is nothing on my radar for the 9 o'clock hour, now I can cycle through and look at Bitcoin and Ethereum because something might jump out, right, that we can take advantage of, and I don't want to miss anything. I'm just looking at Bitcoin, some of the other charts over here. Yeah, so Bitcoin, nothing there. Let's just cycle through, look at Ethereum. Yeah, these are just, it's just hard for me to take a trade on any of these when I just don't, like Ethereum's got potentially a strong weekly resistance pattern, but the monthly is just, it's like, God only knows. I think, you know, weakness on the crypto with what we're seeing with everything else, but let's let it show itself to us, but nothing for the 9 o'clock hour. Okay, let's just go platinum 906. I'm just checking the prices here. Copper, silver, 23 silver, breaking my heart. I would love to short silver at 23.32. Yeah, we're growing, Steven. We're growing like weeds in the field. We got like 55 subs. We're on our way. Yeah, you know, it's a slow. I mean, because YouTube, you could be putting out good content, but if nobody knows that you're out there putting it out, I mean, it takes time for people to figure it out. So, like I said, I'm gonna just keep streaming every day because I'm trading my own money anyways, and might as well just. I committed for a whole year. Obviously, I won't be here when I have the flu and things like that, or if I take a holiday. But generally speaking, I'm committed to trying to stream, you know, every day and actually, you know, try and help struggling traders. And I think it's fun. I wouldn't do it if I didn't think it was fun. I thought if this felt like a chore, obviously I wouldn't do it. But it's a nice social aspect as well. Yeah, exactly. It just takes time. Nobody, especially a community where you have something that works and you have value. I mean, obviously anything with truth behind it is going to grow, but it still takes time, right? Because there's just, people have to like wade through all the bullshit before they like find an island of something that actually works. Crawl up from all the shit. Like, oh my God, I found something that works. All right, look at gold here, big outside bar. And just word to the wise, really be careful on outside bars. Especially, I'll trade them sometimes, but they've got to close near the high or the low. Like if I'm going to trade on an outside bar, like let's look at silver because that would have been an outside bar. See, if it would have closed at 32 or thereabouts, I would have shorted silver, even though that was an outside bar. But you got to just be careful. What's funny is that this is kind of a temporary support pattern on silver. You can see the hourly is kind of holding these lows. I'm not going to buy it at all. You know, it may just collapse, but it also may send it back up to 32 again. I don't know. A lot of it depends on the euro dollar. Trying to break through 109. It's at 08.98 right now. Let's see what the 30-year looks like. So that's, I probably should have, and I'm just, again, tying in all the streaming stuff to my own trading, learning about that aspect. Oops, hit the mic as I go. So I probably, when I saw this, you recall that, Steven, I said on that 15-minute chart there, I said, that's probably an exhaust. And it was. It did exactly what we thought. So I think I need to be a little bit more aggressive. I mean, I love explaining things, but I got to also, you know, feed myself. So when I see that type of a 15-minute exhaust into that key hourly level, I just got to get short. So I will get a bit more proactive about that. That's neither here nor there. It's just a whole new world, streaming and trading. All right, let's cycle through. I think I'm just going to grab, it's 9:01. So I'm just going to grab a quick cup of coffee upstairs. I'll be back in, you know, 5 minutes or so. And then we can just kind of cycle through and see what we've got shaken heading into the stock market. The indices opening up because, you know, if there's a good place to put an order and get lucky by picking off a key resistance or support level at the open, you know, we always look for those. So that'll be nice. Um, yeah, there's a lot of support there on gold, key level. So I'm hoping, like right now, the gift of the day is going to be gold, silver, copper, one of these just spiking on temporary profit taking or euphoria or whatever. That'll set up the short. So just going to wait for one of these good ripe markets to pull back. You know, right now for gold, 2051. Whew, I mean, 2051 is just, you can see here on the hourly, that's where this move started, right here. We were in congestion here, right, this whole time overnight. And then London, we broke out and we broke through a ton of support here. So all that temporary support that was there is now resistance right there. So it tried to kiss that level here, but didn't quite make it. But if we could go up there later, because there's not just all this here, there's a lot of other stuff up there as well. So there's a lot of resistance there. So gold 2051 is what we're looking at. Let's see, Steven, I'll read your comment in just a second. I'm hoping we punch up there. Yeah, silver, I hope we punch up to that level as well. That's why I didn't take, I'm looking at the volume profile. So I like that 15-minute exhaust on silver, but I was just looking for more volume coming in there. We got some volume, but not crazy amounts, which means it might not be the high. And again, I mean, in all fairness, look, I'm not going to scoff at making 10 cents in silver. That's pretty nice. 10, 12 cents, you know, making 10, 12 ticks in the bonds. These are nice, but the ones I really want are the ones that I can catch from a resistance or support level that I think has, you know, the opportunity to run for a couple hours, a few hours, because those are the ones that you can make a lot of money on. You get one of those a month and you pyramid it. I mean, as long as you're not a Kardashian with Kardashian level expenses, I mean, that's a good month. One really good trade. Back to the quality. All right, Stephen, what'd you say? ZB could break daily support. Yeah, I mean, I think it's going to based on the weekly chart. I just don't know if it's going to break it today, but we'll see. I think it definitely could. If we look at ZB. Oh, yeah. Oh, it already broke. Yeah. Well, you probably said that before it broke. But yeah, it's pounding through all that support. Now we're just at these weekly lows here on ZB. See these last couple of weekly lows. So that'll be the next stop down around 16, 10 ticks lower. So yeah, bonds are looking good to the downside. Look at the Ultra bond. Yeah, Ultra bond's looking good. Yeah, the party has started. Strong dollar, weak bonds, rising rates. Hopefully stocks will shit the bed. Give us some good opportunities in stocks at the open. That would be nice. They should. And now we're just waiting. There's gold. So I'm just doing my check before I get my coffee. Make sure I don't miss anything. Copper. Platinum. There's platinum. So just going to wait, you know. You can get a spike when you least expect it. No, for me, that's a day trade. The 3 hour, you know, 2-3 hour trades. Those are the ones those are the ones I love. Those are the ones that pay the bills because you gotta like, just as an example, and I should really get some coffee here in a sec, but I will. Let me go over that example right when I get back. Give me 5. Let's test my new be back in 5 minute thing. Let's see here. It is here. Now, if I go like this, webcam, put on. There's our new break sign, Steven. You see? 5 minute break. Is that coming across? All right, so I'll be back in 5 minutes. Then we'll talk about what I was going to talk about regarding the waiting for those 2-3 hourly trade setups versus, you know, being active and feeling like you need to be in everything. I'll talk a very important point on why that's the case. All right, be right back. Muting the mic. All right, I'm back. Some green tea with mint. Settings here. Okay, so yeah, exactly. There are a lot of different definitions for what people. I call a swing trade anything I hold overnight. That would be a swing trade for me, which I'll do sometimes, but it's very rare. I don't like taking overnight risk. That's why I stand here all day, every day, because I don't have like millions and millions of dollars where I can just sit through a $30,000 swing overnight. That doesn't work for my budget. So I like day trading because it gives me an opportunity to keep the losses small when I'm wrong, and then add to the winners when I can see very clearly that I'm in a trade that could run. So I think day trading, when you can do it right, you can actually take less risk and make more money. Of course, if you had tens of millions of dollars, I wouldn't be doing this if I had tens of millions of dollars. I would be hanging out and just putting on swing trades and treat the swing trades the same way I treat the day trades. I'd apply the same methodology, but you got to have a massive account and be able to sit through. You got to stomach through huge draws. Like, right, if you're sitting through $40, $50 draws on gold, right, 4 or 5 grand per contract, and you've got multiple contracts on, it's not a place I'm at. All right, so what I was going to talk about, and then we got to check for the stock market open. Oh, first, Steven, you said, where is daily support on platinum? And are we still in a downtrend? Let's take a quick look at platinum. That's why I brought it up. Yeah, I mean, we're still in a really strong downtrend on the daily. We're in daily support now. I mean, it basically tagged the low of the daily support here. See down there. So I think now we're just sucking up, but resistance in my view is, I mean, anything can happen, but you got to ask yourself, what's the dollar doing today? The dollar's getting stronger. Let's see if the dollar stays strong. What are bonds doing? They're selling off, right? So rates are heading higher. So, should platinum close up here for the day? No. I mean, it could. I always have to say that, because that's one thing too. The longer you're in this, you realize, like, you don't only say anything can happen, you really mean it. Like, anything can really happen. But you got to play the probabilities. So the probabilities are platinum should close down here. So even if it rallies, I just view that as a good attempt to get short. So that's, I don't think the downtrend's over at all. I mean, look at this. That's the daily, but I mean, look at the weekly. Weekly platinum just collapsing. You got all this now on your trade station, right, Steven? I sent you the indicators, so you got it all set up. All right. I mean, this is Sierra charts, but on TradeStation, it looks the same. Except you've got the congestion. You notice here, I don't have my congestion trend lines. It's not because I don't want them. It's because the coding in Sierra charts is a bit, I have to get somebody to code those for me. But that's fine. I can see them anyways, even though they're not on the charts. All right, so that's what we're waiting for, the pop in these markets. Yeah, so the reason, what I was going to say before I went away to get the tea here, is that, oh, you didn't see them? Yeah, they should be in your inbox. I sent them last night before I went to bed. I got your email. I sent them over to you. So yeah, the reason I'm trying to wait for those runners, the really good trades, and you're not going to get those runners unless you're taking the trade from one side of the daily zone to the other, right? That's where the zone, that's where the runner is going to come, because you got to go from one side to the other, or whether it's from the top to the bottom or the bottom to the top, or if you're trending, that you can get a runner too. But those are rare days, right? Stuff is typically going like this. So I'm looking for those trades where it's like we bring up silver here, right? That's a great, I told you, okay, I said, okay, maybe I should have shorted that because we were at the key level and the 15-minute exhausted. But then I remembered, I was trying to think to myself, why didn't I short that? There was a reason, because I have a reason. And I looked over at the volume profiles. Yeah, because I didn't see enough volume coming in, at that level. And now that doesn't mean we won't go lower from here. We might, but typically you're going to see the biggest volume come in, like, let's say silver spikes above these highs up here at 2340 or something, right? 23.36, tries to take out the highs. You'll see fresh volume coming in, like people trying to chase it, thinking it's breaking out long, and a lot of them will come in and buy it up, and then you'll have somebody sitting on it, absorbing all that. That's where you'll see that volume come in. Those are the ones that can usually lead to the runners the other direction, because the runner is caused by not only, you know, like in this case, if we're going to go from, you know, up here to down here, the runner is caused by not only fresh shorts piling on, but all those longs who bought the breakout who were wrong. You know, they got to get out, bail on those longs, which is going to accelerate the fuel to the downside. So that's why volume for me plays a really important role in trade selection, because, you know, I know looking back that the good ones, you know, tend to start with that type of volume profile. I can maybe show you an example. Does that make sense to you, at least in theory, Stephen? Am I explaining that okay? Yeah, and check for those indicators. Let me know if they came through for you. I should have. I sent you my charts too. I sent you some TradeStation workspaces that you can just, once you install the indicators, open the workstation, and then it'll just, you should be able to have it all ready to go on your TradeStation. TradeStation is where I've got the most complete set of indicators because I've been there the longest. Sierra chart, I'm still building stuff out, but I'm almost there. And then TeamViewer, I still got to build out, but that'll take some time. Yeah. So here we want to look at the stock market. Let's go to, oh, you have them. Okay, cool. Yeah, because you can follow. That's what's cool when you have the indicators and the charts, Steven. You can flip around on your TradeStation charts, you know, and look at things and try and study things while we're waiting. Then you can ask questions. Okay, so here's ES. And then I'll find an example of the volume for you guys and show you what I mean, because I think that's really something that's important. And it's just not really understood in YouTube world. I don't see a lot. I see some stuff on volume, but I don't see a lot of stuff. And it's key, like volume is, you know, it's the underlying, you know, it's telling you how strong or weak the auction is. I mean, super important. All right. So looking at ES here to get started, what we can see, again, we got to be careful overall because we're still in this daily zone, but very bearish on the week. I'm just pointing all this out to say, is there a spot that's jumping out at me on my weekly, daily charts where, you know, if ES spiked, would I be willing to put an order? I don't see anything right there. Let's look at NQ. So with NQ, I mean, we do have a strong hourly pattern here heading into the open for NQ, but I'm not going to take it. There's not a lot of support there that I see. So we've got quite a lot of support today on NQ at this daily extension here. And you can see we've already reacted. So that's, you know, that support is strong for now until it's not. Ultimately, I think it's going to break because of the weekly pattern. But for now, that's coming across, you know, 16, whatever. So, let's get the crosshair, get the exact 830 basically, right? So that's on the daily chart. And we do have the weekly dot zone there. So you got some support there. So I'm going to watch, you know, there's nothing else to do at 9:30. I'm just going to watch the NASDAQ and see, because you do have on the hourly here. Do you see how this is what sometimes I'll do this, guys, heading into the open. This is a really good play for you. Okay. Where I'll see if I can get any good reads. Like for now, I'm going to stay away from stocks generally, and I am bearish, right? But there's a lot of crazy stuff that happens at the open, right? That can just cause it to go nuts, you know. Even though I'm bearish stocks, that doesn't mean we might push back up to over 17,000 by the end of the day and then dump tomorrow. We don't know that, right? You have to wait and let it show its cards, right? So for gold, silver, copper, platinum, bonds, these are already showing their cards. That's why we're more interested in trading them. Stocks, we haven't exited daily congestion yet to the downside. And the way we reacted off that support level so far on the daily NASDAQ at 16,840, I mean, there's a lot of support down here. So when I see that, I look at the hourly chart and say, okay, you know, you got a nice extension down there near those lows. You got some other support down in here. So you got a lot of support there for now, right? Doesn't mean it's not going to break, but this is the case where heading into the open, you know, I could look at all this and just watch and say, okay, well, if it spikes down here, would I be interested in, you know, let's say I put an order at 16.8, you know, 25 or whatever that extension is, right? I'm not saying I'm doing this. I might. I'll let you get 16, you know, 26, something down here, right? If I was to put an order there and then, you know, your stop would have to go below the low of the day at, you know, 16.810, right? So that's like, say 15, 16 points of risk in the NASDAQ. Well, sometimes I'll put that trade on because if you know, if it spikes down there at the open and fills you and then sucks back up, I mean, you're in a position there where it can do something like that. So if you're risking 15 points, right? And, you know, you're comfortable just, you know, risking a couple $100, whatever, you can catch a runner sometimes from one side of the range to the other at the open. So sometimes if I'm feeling pretty confident about a level, I'll throw in an order. How often does it get filled? Probably 20% of the time, but when it does get filled, it's usually a pretty good trade. So I'm always looking for these at the open because, you know, I'm not doing anything at 9:30 anyways because I'm waiting for the 10 o'clock check across all of our hourly charts. So let's, I'll let you know if I do set that order. Right now, I don't have an order in, but, you know, looking, especially if you look at, let's look at bonds here. You know, bonds are heading lower, so we're still waiting for a short on bonds, but that doesn't mean they can't. It doesn't mean that stocks can't pop. Let's look at gold. Here's gold. Why is oh, is this something's going on with my gold chart? Let me just see here what's going on. Let me just fix something here, guys. I don't know what the hourly is showing 23.29, but the 15-minute chart is showing 23.14. What do you have for the price of silver right now, Stephen? You have gold at 20.46. Yeah, I've got gold here at 20.46. Oh, I see. Sorry, I made a mistake. That was Sierra Charts. What Sierra Charts does is if I'm looking back at something like this, then it just makes all this data disappear here, whereas TradeStation, I can see that I'm back. So now I had to, so here, that was my bad. We're all good. We're correct. But yeah, so my point with, you see how gold's trying to rally here? Silver's trying to rally. We might get a little bit of a pop here at the open. Hopefully we'll get some good shorts on these other assets at the 10 o'clock close. But at the hourly, at the half hourly open here on the NASDAQ, I'm kind of curious because the dollar is also rallying. Sorry, the euro is rallying a little bit off the dollar. So you've got a lot of support down there at that 16,840 level. And you've got a bullish, temporarily bullish situation here on the hourly. So let's watch it. I don't have an order in right now. Look at the Dow. Good to short silver. I'm going to wait for the hourly close. But it's good that you, Stephen, you every time I make a call that I feel good about, you can just, you know, take it and then send me the stats and I'll probably start taking them too. Or I'll just hand over an account to you so you can take them on a real account instead of a demo account. That'd be nice. Give you a 10% finder's fee. All right, let's here's the Dow. Yeah, you've got some. The Russell is going to be the weakest of the bunch overall, so I'm just waiting for a pullback on the Russell. But the NASDAQ could definitely pop here at the open, and It's probably won't come down there anyways, even if it pops. It's just that sometimes it can get crazy, you know. I think we have a Fed person speaking today, Waller. I gotta check the calendar. I think Waller's speaking, I think at 10. All right, the market. Let's see, the bond market can get a little nutty too. Silver, yeah, they all can get nutty. Silver kind of ran into that 23.30 level again, but I'm waiting because you're coming out of a strong hourly pattern now, so we may go up here. I don't know. We may not, but I don't want to short against a strong hourly pattern on silver. Let's look at copper. I'm waiting for these to pop. Yeah, exactly. You got your own indicator. So let me know how you're able to download and use all those, Steven. Should be fine. Looking at, let's look at the ultra bonds here heading into the open. Yeah, trade station. They're not bad. Just, I don't know. I have it for backup. CR charts is kind of my new favorite. I'll get trading view as well. I'll get the indicators on over there. It's always good to have redundancy so you got backup in case somebody's having problems. All right, let's just keep an eye on the NASDAQ here for the open. I don't have any orders in, but I'm kind of curious to watch that. Basically down around these lows here. I'm just going to bring it up on my DOM just in case. If I do anything, I'll let you guys know. The other markets are developing right now. We've got a lot of support on the NASDAQ down at about 16,840, 16,8. Yeah, basically that 16,840 level. So I just want to see, like, if we were to get down to that level and I was to see some support coming in on the NASDAQ, I might take a flyer and buy it, but I'm going to watch it. Yep, ding ding, there's the bell. A piece of chocolate while we're watching and waiting. So what's cool too about live streaming is that as more people come in here and people understand how this works and what we're calling out, we can work together. You guys can help me keep track of stuff. Imagine, like, once the live stream, you know, Steven, you're helping me keep track of things. We've got other people keeping track of different markets. It's going to be, you know, it's going to be nice. I'm just bringing up one at a time. So, I mean, with the NASDAQ here, bullish heading to the open, but I'm hoping the bullishness in stocks at the open is just going to drag, you know, gold, silver, copper, platinum higher and set up that short that I'm waiting for, because they just look so good from the short side. NASDAQ, like I said, here at the open, if we were to get lucky and get a spike down into 16,840, you got a ton of support down there. So I could potentially look to pick off a long down here, but not on a resting order. Just if we get down there, which is unlikely, and if I see support coming in, I might, you know, take a flyer at a long, but let's see what happens here. Let's check ES back at 4,800. You can see here, I mean, yeah, you got the monthly point of control for ES at 47.93. So looking like it's probably going to push up out of all this. But I like the level better on the NASDAQ at 40 over here. This 16,840. Let's look at silver getting smashed out of 23.30 again. Yep. I would love silver just to punch up a little bit, set up a short for 10 a.m. would be amazing. Up into 23.32 or higher. Or at least start breaking out, because we got a lot of room to go to the downside for silver today. I mean, if it really starts to punch through this 23.10 level, I mean, we could see 22.80. That's a nice move for silver. There'll be lots of pullbacks as that's unfolding. So Makes sense. Just to see, this is the kind of market here, even though we called this top pretty perfectly earlier at 23.32 for silver there. You see how choppy and shitty it is? These are the markets where you still got to take kind of the same amount of risk, right? Like if I'm going to go short silver, I don't want to miss the NASDAQ. Let me know if the NASDAQ gets anywhere near 16, 840. I doubt it will. But right here on silver, for example, if you're going to short up there at 23.30 or whatever, you still got to use at least 5, 6, 7, 8 cent stop on silver, right? So $25 a tick, $50 a cent. I mean, you're looking at like a $350, $400 stop per contract anyways. So that's why I'm waiting for the ones that I think have a chance to run and pay out on that risk I have to take on that stop, right? It doesn't mean that if I get into a trade and I make 10 cents on silver, I mean, that's great, right? You make $500 on one contract. That's fantastic. But how much risk do you have to take to make that? I'm trying to find trades, where I can find potentially a lot more reward, where I can pyramid onto a winner for that original, risk on the trade. That's why it pays to be patient. All right, let's flop over to copper real quick. Just waiting for these to set up for the 10 a.m. close. The copper is just kind of waiting. I'm just going to check on that, guys. See if Waller or the Fed is speaking at 10, because that might give us a little bit of volatility. No, that's 11. The Waller's at 11. That's good though. That'll give a little bit of volatility. Okay. Let's go ahead and look at, that's copper, just quiet. Let's look at platinum. Platinum on a short as well. Just want to get a little bit of a pop. Platinum, I really like 916 up in here. Just let the market. It's kind of one of these guys. So you see, here's platinum. There's a good example of this from the other day. Right, this is what you want. This is what I want, anyways. Right, these are the exact trades I'm looking for. I'm looking for the market to exhaust into a key resistance level to short, or exhaust down into a key support level to buy. So here's platinum. This is an example of, you see, it pushes up into a ton of higher time period resistance here, right? You got a lot on OMA as well, right? You got the extension, you got the high connector. I mean, this is a good combo resistance level. You got a lot of reasons to go short up here on platinum. Then what you want to do is you want to look at the volume profile and see, as the fresh breakout traders are coming in here trying to buy it and push it higher, is there somebody sitting on it absorbing all that buying? And if there is, you'll see that the volume will start to shoot out at that level on the profile, and price is trying to push up, but it can't because somebody is sitting there absorbing all that, right? If I see that combined with the level that I like on the daily and a pattern that I like with OMA, that's where I want to short, because this is the one that can lead to that kind of a drop for several hours. And once you're in one of those, that's where you can hold and add, right? And you can trade around your trade. Those are the ones I want. And it's just, they're worth it to wait for those trades. And, they do come if you wait, especially if you plan out your day and know your zones and know your direction. Steven, did you see the PDF I posted? And you can, even if you don't have time to watch the video in the elite members area, you can download the PDF and then you'll see, just my notes for the day here for everything. You'll see, sticking to that game plan that's what I'm waiting for. So bonds waiting to go short, metals waiting to go short, energies look messy. We want to keep our eye on the dollar, make sure it stays strong. Stocks, I think, look volatile and messy because, again, we're in that, daily congestion zone. It's been all crazy. The ags are messy after the crop report on Friday, so probably staying away from those, although we will check in just to see if anything jumps out. Bitcoin, Ethereum look messy, and the meats look messy as well. So this is how we're just narrowing it down each day and knowing exactly what we want to trade. Okay, cool. You're able to download the PDF, though. That's good, because that's sort of the daily guide. I'm talking about everything here as well, so... but that just kind of helps. You can print it out and have it on your desk, and you know what we're looking for. All right. So this is platinum at the hourly, the 15-minute. Let's go ahead and just cycle through everything here on the hourly charts. We've got about 22 minutes until our next decision to see what we want to trade. Bonds were a good short from the 8 a.m. hour. Metals were, you know, we almost had a great one on silver, but it just didn't quite set up quite the right way, but we'll keep an eye on that. Let's look at the ES here. So the question is ES going to set up, this is the hourly chart. Do we want to get involved here? No, not unless we have a desire to lose money. So we're not going to get involved in the ES right here because number one, we don't have a desire to lose money. And number two, the daily chart here is a big bag of excrement. We don't want to get involved in that. We want to let it show its colors. So we're on standby for ES. We'll let all the cowboys go and scalp over there and have fun. On the NASDAQ here, basically also my, you know, when I'm watching that 16,840 level, that's just sometimes you'll get a big, imbalance at the open. That time period has passed. We're already 10 minutes since the open, so I'm no longer interested in that level. And I'm not interested in the NASDAQ right now as well for this hour. The NASDAQ, the indices are going to have to move. They're going to have to go toward resistance or go toward support. Because right now, look, here's the NASDAQ, the last 5 days here, right? Resistance is up in here. This is just the daily. I'm not going to go into all the other stuff. I mean, look at how tight. This is a good time to lose a lot of money, which, you know, we want to try to avoid if we can. So we're not going to get involved with the NASDAQ. It's just not looking clean. Let's look at the Dow. I mean, the Dow, I know we don't want to do anything on. Well, maybe the Dow and the Russell can get the party started to the downside because the Russell is certainly, I mean, the Dow looks a lot stronger overall, but the Russell looks the weakest. And I can't wait. So the Dow, we're not going to do anything. But let's look at the Russell, you guys, because the Russell is going to be our punching bag, I would say, for at least a couple of weeks, as soon as it really starts to break down. And here we can see it's definitely the weakest. This is the daily Russell. We're leaning. We start breaking through this support level right here today. These old lows from early last week, right? You see, we start breaking through all that. I mean, it's good night, Russell, and, you know, hello shorting. So let's just wait and let that happen. Like, we don't want to short now because we're in support and we don't want to short support. That's not smart. We want to wait for support to break or short into resistance. So the Russell we're waiting for. Certainly if we got, I hope that this support on the Russell holds. I hope the indices jack higher for like the first hour, hour and a half, get everybody that they need sucked in, and then we can get short because they're definitely bearish, but you know, we'll see if they drop. I want a little bit of a bounce to short into. So the Russell, we're waiting. Let's look at the 30-year. I mean, we'll look at the 10-year. I don't really trade the 10-year very often, but we can at least just look at it from the charting. Look at the 10-year hourly, just a mess. Just doesn't know what it wants to do. I mean, there is a truckload of support on the 10-year. I'm glad I looked at it. Here into 112, 2.5. So hopefully that's good. That's good for us, guys. There is a massive amount of support here at 112, 2.5 here on the 10-year Treasury note, right? Which is good because if that support can hold and jack Treasuries higher, ease rates off a bit, that might be, you know, easing of rates temporarily will be the catalyst to at least spike our metals and, you know, spike the euro against the dollar and set up that short, right? We need a catalyst to set up for the short we're waiting for in the metals. So, but you can see just right now the 10-year doing absolutely nothing. Hopefully that support holds. We're getting down to my 16,840 level on the NASDAQ. So I know I said I wasn't interested, but now that I saw the 10-year maybe stabilizing and rate stabilizing, I might have to turn my attention quickly back to the NASDAQ. We're at 16,880. I really want to watch that 16,840 level. But here's the 30-year, not going to do anything there. There's Ultra Bond pushing lower. You can see this here with the Ultra Bond and the 30-year trying to push lower and the 10-year stabilizing. This is the uninversion of the reinversion that leads to the recession. So this happens. You start to see this kind of activity in bonds when the recession is actually starting, and you'll see the inversion of the yield curve long before signaling that a recession's coming. And then when you have the uninversion of the inversion, which we're seeing now, it's like, hey, that's when the recession arrives. And all you have to do is look back at history. It happens like every single time. So low recession. All right, so that's why the longer end, the 30-year, is heading lower while the 10-year is stable for now. But do we have a short here on bonds? Not on the, we are breaking out on the bonds on the 30-year though. On the ultra, we're breaking through support, as you can see there. So that's nice. So now we just gotta stay vigilant and see what we get on the hourly. That was kind of the trade, you know. There we're almost caught that on the 30-year. Had the order to short there, right there at the. Or no, this is the ultras, but on the 30-year, right up there. That's fine. Getting used to streaming and trading. It is fun, but you got a lot to keep track of. All right, gold. Look, just doing nothing is a good place to lose a lot of money with gold right now. That's why we're waiting for a pop. Silver, our resistance level is holding nicely, but not really setting up a short right now. Let's look at copper. Same thing. Look at copper, guys. Look at the hourly copper. Just a mess, right? Good time to stay out and not lose money. And NASDAQ still at 16,890, so I'm going to keep an eye on the NASDAQ. Here is platinum. Yeah, platinum just waiting for a little bit of a bounce. See, because I'm not getting involved. You know, there's, for those of you who love to go nuts and trade the 15-minute chart, I mean, you can just focus on one asset and just trade the 15-minute. You'll get some trades in there. Just for me, you kind of have to take the same risk on a 15-minute trade and an hourly trade. So you might as well take the risk on the trade that gives you the chance to let it run and pyramid the shit out of it. I mean, that's really what I like to do. All right, let's look at crude, which we're pretty much staying away from today. Crude is just, look at this daily chart. You guys, it's been a nightmare. Look at this. Can't even rally. And the Houthis are firing, you know, drone missiles or whatever they're doing at U.S. destroyers, and crude still can't rally. That tells you crude is pretty darn bearish. Even though there's some good support here, but it just doesn't want to rally. We're not doing anything in crude right now. Look, this is a good place to lose money. So it's my favorite quote in trading. You guys know this, and I think it's attributed to Larry Pesavento, but I'm not sure. Whoever it's attributed to, it's a genius quote. Trading is not about the money that you make. It's about the money that you don't lose. I mean, it's just, that's it. Focus on managing your risk. Wait for the good setups. Don't get all, you know, anxious and crazy while waiting. And the good stuff comes. And have fun while you're doing it, which is why we're going to live stream and have fun as well. All right, here's natural gas. Breaking out to the downside. I covered this in the pre-market that the weekly did look bearish, because on the weekly chart here for nat gas, we gapped open underneath the true average and the envelope top here. So very bearish nat gas. But I'm not seeing a pattern there. The dollar is making another run at 109 here, Euro futures. So, I mean, this is not looking good for the euro. This is looking good for the dollar. So hopefully this will just cause the Russell and, you know, some of these others to shit the bed to the downside. All right. Corn, soybeans, wheat. As I said, just I'm going to cycle through these, but I'm not going to comment a lot. I'm just seeing, this is corn. I mean, corn would have to give me a short up into 458. I'm not interested in it right now. And you got to be careful. They had that crop report on Friday. Wheat is doing absolutely nothing. See, because when people are looking back at charts and studying and doing all their moving averages and all that, you know, their Fibonacci's and whatever else people use, they're not looking at all the trades that they could have taken that would have made them lost. They're only like looking at the ones like, oh yeah, that's a big winner. I would have made like millions on that trade. Oh yeah, I would have made millions. But the number one aim of the game is to not take all the horrible trades, because the market is there to tempt you into shit trades constantly. That's his job. That's what it does. This is soybeans. Just not looking. You see, I'm looking for exhaust. Do we have an exhaust here? Like a big imbalance. That's what I look for across all these markets. That's my style. That's not the only way you can use OMA. You can use OMA in any different way you want. For me, I've always loved exhausts, and I've developed my style around that, trading these markets. I'm looking for something getting out of balance, and I like it, you know, like mean reversion, for it to get back into balance. But sometimes I'll jump on board the trend. Like if everything starts to shit the bed today, we're going to have to bring out the 15-minute and just focus on pullbacks there. Still remains to be seen, because we got to hold below 109 on the euro dollar futures, and we got to, you know, bonds need to stay below that daily support level. Okay, so that's soybeans. Let's look at soybean meal just quickly. We're not going to do anything on these today. I mean, the grains are not going to get going probably till March when we get into planting season. I got to go reread the book that my mentor wrote on all grains. The guy was a genius. Let's look at soybean oil. Again, just look at this garbage, guys. So isn't this interesting how, like when we point this out, Stephen, just to stay away from crap trades, how important that is. Okay, uninversion of the inversion. Yeah, however the hell I'm supposed to say that. I think you know what I mean, right? It gets inverted, and then when it starts to uninvert, that's when the recession has arrived, right? You guys learned that at Pepperdine, right? So it's like it inverts, and then as it stays inverted, you know, it's signaling recession, and then as it uninverts, the recession is here. So that's the way that works. Let's look at, so the grains, nothing. Here's cattle. Quite messy. You get hogs. Okay, we got a ton of support on hogs down at 69.60. So, you know, if the next hour here on hogs, you know, even though I'm generally not interested in hogs today, but if this thing spiked down here, we've got a massive amount of higher time period support down there that could cause a move like that. We'll keep an eye on that. Look at feeder cattle. Not seeing anything I like there. Again, Bitcoin and Ethereum. We said we expected weakness. That is what is happening for right now, but they are kind of messy. So there's Bitcoin. Nothing I want to do there. Let's look at Ethereum. Messy. I mean, look how choppy these markets are today so far. I mean, this is just, it's a good market to lose money. So you can see that the picks of the day, the bonds and the metals, they are kind of giving us the best opportunities so far. We can see, right? Here's the NASDAQ. I'm no longer interested in buying down here right now, or really today at all, just because the forecast is to the downside. So I want to avoid the downside. But what we can do is we can keep our eye on this key level that, you know, if stocks are going to rally, I mean, this has got to hold. So if the NASDAQ shits the bed and closes down below that extension right there, I mean, there's a lot of support at 1640. So if we close down in here, could be off to the races to the downside, but let's wait and see. The Russell is the one I'm most interested in. And here we go. The Russell's trying to head lower, trying to break that support. But again, I need a little bit of a pullback. Like the Russell at this point, you know, in the next 10 minutes, the Russell can do anything, right? It's a powerful. If we were to rally right now on the Russell from like 1939 here and try and close back up here at like 1948, that could potentially be grounds for a short. The only thing that would be, because we have some resistance there, I do think we're breaking out. The only problem is that we're getting into the kind of deep in the monthly value area low. That's a dangerous place to short. We'll keep an eye on it. Let's look at, remember what I said about the 10-year, all that support. Let's look at the 10-year. We still got 8 minutes until the hourly close. See, this is how we're just putting together, you know, the whole basket to see what we expect for the each hourly close. Look, the 10-year is just sitting here. 30-year pushing lower, trying to anyways. Got a lot of support down in here on the 30-year, but no real pattern to buy it into. Ultra bonds. Really gold. So we can get a pop on gold up into, you know, 2051, 2052 up in here. It's possible. I'm waiting. Definitely not shorting in here. Also the speed of the move, right? Like when you get in a move, you want it to go somewhere, right? You don't want to just sit here and, you know, watch it. And I don't like that anyways. I like to be in a move when I think it's going to go somewhere. All right, let's look at the silver. Still waiting for a pop. Nothing here. Copper, waiting. You guys can see this is the market. It just so happened I started streaming last week, and this is the market that, you know, we're in right now, which is this market that is, you know, it's waiting for its direction. Like even the metals, even though platinum's, you know, leading the charge to the downside, and so is copper, and those have been giving, you know, semi the best opportunities. But gold, silver, the indices, they're kind of waiting for bonds, and bonds are finally now starting to show their colors and break out to the downside, which is fantastic. That's what we want. So as soon as we break out, we're going to have a lot more opportunities, which is going to be awesome. But it's good that we keep our powder dry while waiting for these opportunities. So I don't see anything crazy for the 10 o'clock hour. I don't see anything at all enticing. I mean, ES, you got a lot of support here at 47.80. Whew. I mean, I don't want to go against the higher time period, the weekly, because the weekly looks down, but there's still a lot of support down here at 47.84. And if the 10-year, see, we're at the lower end of the range. So if I was going to do anything with stocks, you know, it would be a long, even though I'm probably not going to, but it's just, I'm looking, we're at a key level here, 47.82 for ES. Yeah, exactly. It's a good market to show restraint. Let's look at the 10-year here. I mean, it's a key level. If the 10-year holds this level, stocks are going to rally, and they might. They really might. And I might have to take a little bit of risk on ES. I don't know. We'll see. I'm going to bring up my DOM on ES. Yeah, even potentially, I mean, even potentially higher. We'll see. I would want to, for me, it would be sort of a maker, like I would set my order down around 47.81, and it would literally be, I would probably give it, you know, like 3 points, because it's a very strong level. But the dollar's trying to chew through 109 on the euro. The 30-year and the ultras are heading lower, but the 10 years, I mean, the 10-year, as long as the 10-year stays stable, could be a lot of support here just for today. But I got to be careful from the long side. That's why I'm not, like, you know, jumping at it, because I don't know anything for sure, but I'm pretty sure that the next big move on stocks is going to be down. Look at the Russell. Russell's trying to break. Let's look at the volume on the ES. I'll have 3 minutes here. Yeah. I might long ES, but not at this exact level. It'd have to close a little bit lower for me. So I'd wait for the, if my level on the ES, it would be down here around 47.81, which means the 15-minute would have to go down there and challenge that, and I'd watch the volume very carefully. So we might keep an eye on that. Not much else going right now at 10 o'clock anyways. We're just hunting for trades. High quality ones. What time are you leaving today, Steven, your commute? I know you told me, but I forgot. Got my lint. If we can grow the stream to like 10 live viewers, maybe we can get Lint to sponsor us. That's obviously a joke. Not that I wouldn't want Lint to sponsor us, but I'm not delusional that we're going to get a Lint sponsorship after 10 live viewers. I shouldn't have to say that, but in today's world, you never know. People just don't get it. Not you guys, the other people. All right. So just do one last quick check to make sure nothing has changed dramatically in the last 5 minutes. NASDAQ is not giving us anything. Oh, Dow's got a lot of support here, potentially. It's kind of breaking its daily though, so I wouldn't long the Dow here, but if it breaks this support, that's big. There's a big level for the Dow. Keep an eye on that. Here's the Russell. I have a feeling the support is going to hold if the 10-year holds that support level, which the 10-year is, and it's rallying. And they're just like, here's the Russell, right? I think they're going to jack it back up here. They just have to. They love to do that because that's what gives the liquidity for the next move. I still don't, the Dow looks a little too on edge there for me, but you can see ES is responding. Okay, there's the close. So not doing anything. She just sucked right back in the middle of the range. That's ES. In about 20 minutes. Nice. Good luck with that. All right, here's NQ. You got a decent little short pattern there. It's not bad on NQ, but not enough for me considering where we are on the daily and considering that the 10-year is just at a massive support level. See, because even if the NASDAQ drops right here, it's like, okay, where can we go on the NASDAQ? I mean, right now, I think the risk is that, you know, there's still a lot of support because of what we're seeing on the 10-year. So this is how I make these decisions. Yeah, here's the Dow. I mean, that's a lot of support there on the Dow. But just, I can't, even though I think it could pop, I can't, given where we are on the daily, I just can't touch that. So we'll wait on the Dow. Look at the Russ. Yeah, there's the Russ. I think stocks are going to bounce here with the 10-year. See, the 10-year is pushing higher because of that key level at 112, 2.5/32. There's the 30-year stabilizing for now, and there's the ultras. Just waiting for a pop. Hopefully this stabilization in rates can just get some of these metals to pop. These are the ones. These are the ones I'm waiting for today. And if I see something decent on stocks, you know, like if the S&P would have closed down there into 47.81, yeah, I probably would have risked a couple $100 because, hey, like if I'm right, I'll make $1,000 on that trade because it was such a key level. But the big money I'm willing to risk, hopefully potentially make today, is on shorting some of these metals or the bonds on the pullback. Here's gold. We're not doing anything. Let's look at silver. Just sitting here. Waiting. Probably going to head down from here, but I can't short it here. Look at copper just doing nothing. I know I cycle through these constantly because you just have to, they're always changing. You got to see what the relationships are doing. Platinum, you know, doing nothing. There's crude. A lot of support here on crude. The daily true average. I want to buy crude. I can't buy crude. I'm tempted, but I just can't because it's just the daily pattern is just not good. I mean, look at the daily here. I'm tempted just on a short-term basis. Looks like there's a lot of support here for crude, but I'm not going to buy it because look at this daily. If the daily says, I mean, look at this. I shouldn't have even bought that. Well, when I bought that on Friday, when there was still, we could have closed. At least we could have had a chance. We were, but now we have even more confirmation that crude is just a wreck. We're not touching crude. Let's look at nat gas, make sure we didn't miss anything. Euro US. Yeah, so we're just waiting. Here's ES. A lot of support down there, 47.80. So I might keep an eye on ES if just for this hour, because we got a whole hour to kill. And if the 10-year continues to stabilize, which it is, and the euro's trying to hold against the dollar, I'm going to keep an eye on all this. But with ES, I mean, if we push down below this low to about 47.81 and the 15-minute, gives us some confirmation down there, I might take a very short-term, trade, try and risk, 150 or something to make whatever, 5, 6, 7. Gotta pay for lunch, right? Can't stand here all day. I mean, 1 week last week, that was a good week to be patient. We can be patient again. We can be patient again. But I mean, there are some microstructure trades that if you see a really good level, I could call it like a microstructure. We can take sometimes. It's going to be nice when it's not minus 10 here. You guys had it pretty cold, Steven, right? I mean, it was, I read, the news made it seem like you guys were all dying. Everybody's going to lose power. Just looking at volume profile charts. I do like the setup with the 4 screens, though. I'm glad I got that extra one. At some point, I'll get the 5th, I guess. See, we're going to be going down to the Canary Islands soon. Then I got to lug all this shit down there. Or just leave it and buy new stuff down there. I don't know. All right. Low day, though, huh? Look at the indices. They just don't know what they want to do. What are you going to do? Oh, right. Yeah, you guys get cold anyways all the time, right? So it's not a big deal for you. Are you from, I don't want to say where you're from, Steven, in case, other people, like a private thing, but I know where you're from because you told me. So are you from that area, or is that like your family there, or did you just move there for some other reason? I'm from SoCal, as you know, so I prefer the beach and the sun and the surf. Sweden does not suit my lifestyle very well. I hibernate because I look outside. I'm like, oh, I haven't even gone to the gym like that much lately because it's just been so cold and I've been just busy with other stuff. But I got to go today after. I got to go do the sauna, the ice bath, get back in the routine. Okay, cool. So you're from there. Nice. Yeah, you spent some time in my neck of the woods when you did your MBA. Nice area where I grew up. It's just stupidly expensive. Like, why anyone would ever pay like $1.5 million for just a little boxy home? I mean, it's just stupid. Prices are crazy. Yeah, those are I told you in the email how you can get rid of the outer bands. So you can just make those the same, change it to the smallest dot under the style settings, and then just make it the same color as your background. You won't see it. You will want to use those later. You can develop some really good systems around those. But that's going to be like an advanced webinar I do for the members area at a later date. Yeah, you can change all the colors, make it, I've got the very basic version up here because I decided, I see all this stuff anyways, even when it's not plotted on the chart. And for streaming, I want to make it as like unimposing as possible. Those charts I sent you, those are pretty imposing, right? Those are the real deal. You've got all your levels clearly jumping. Good for you. They're visual. You can see everything very clearly. All right. So ES, we're hanging out. NQ. Well, we got Waller speaking at 11, which would be nice. Yeah, exactly. That's insane. I don't know, like unless you're like a Hollywood celebrity and you make millions and millions and millions of dollars. Honestly, even if I was sitting on $10 million, I would never spend $3 million on one of those tiny beach houses in Malibu. I mean, it's terrible. Europe is a lot better than that. All right, we're starting, the Dow might rally here. Gosh, tempted. So much support there on the Dow. The Dow is a small contract. I don't want to let that influence thinking. I'm going to hold off for now, but the Dow's at a key level. Probably going to rally back up to, I would say it's probably going to rally back up to 37, back to the other end of the zone, I think. Just kind of, I don't think ES is coming back down to that key support level at 81. I think the Dow, we're still close to that support level. A lot of support here. Yeah, I mean, there's just a lot of support down here, and it kind of looks like it wants to cycle back up to the other side of the range. I mean, it's hard to say. It's not like a good enough trade to take, but let's see what happens. Especially with a 10-year kind of stabilizing, I just think stocks are going to try and, maybe try and ramp a little higher. And that's the thing too about this channel, like I hope people use my analysis, to make informed decisions for their trading. This live stream is not just about watching me put on my trades. Like I'm one guy who trades a specific way, right? So lots of people can use my analysis to try and, maybe put on good trades for themselves. Would you fall under a congestion trade here? Yeah, definitely. The hourly's in congestion. But, you got to plug it into the monthly, and the weekly and the daily are very weak here. So, if I had a strong sense about the daily and the weekly, this would be a great long right here for the Dow. But because I don't really like what I see on the daily, the weekly, You know, it's just better to wait. It looks like it wants to try and head back up to the other side of the range, but you know, you never know. Look at ES. The ES is trying to push. This is kind of what I thought would happen, just for now. So it's good. Yeah, I hope people, as word about the stream gets out, people will come in here and use it for analysis and, you know, use it to help their own trading setups, because it will be valuable. This is ES, just kind of pushing, waiting. NQ is trying to push. That's kind of what I thought. What resistance are you talking about, Stephen? What resistance is the Dow trying to break through? It looks like it's trying to break down through support. That's why I didn't call out a buy there. But I'm hoping stocks just squeeze higher, because that'll hopefully give us a good short we're waiting on in the metals. So we'll see if the congestion zone is valid on the hourly, then it'll go back up in here. I think there's a lot of resistance up around 37.8 that I feel like it may want to go test up there above those highs. But, you know, we'll see. Not really a trade I'm interested in taking, just kind of analyzing here. Oh, the monthly. Okay, we can take a look at that, and then we'll just go check everything else out. Well, the Dow monthly is very bearish. Like here, you see? That looks like a 2-bar exhaust push. Right now, we're stabilizing at the monthly true average, but I think it wants to go down here. That's why I think the weekly, I think there's a lot of distribution going on up here. People are buying, but somebody, you know, the big boys are sitting up here absorbing, which is why you're getting all this chop. So I think we're headed out. I think weekly wants to exit congestion down, which is why I'm not calling out a buy here on the channel, even though right now the hourly, you know, could definitely cycle back to the other side of the range. But that's why I'm not looking for trades that go against the energy. Maybe, you know, we'll start keeping a database, and, you know, you're a statistically minded guy, so if we see that a lot of the trades that I'm calling out, that I go, well, I don't know if I would take this, but it looks pretty darn good, you know, maybe we'll start taking, I don't want to call them scalps, but start putting smaller trades on those. But as it stands now, my personality is I like to wait for the juicy ones. Yeah, exactly. It looks like a 2-bar exhaust to me on the monthly. And remember, I just want to point out too to everybody, you know, I'm just waiting for the really juicy ones here. So, and I'm analyzing for you guys. So feel free to use the analysis however you see fit, you know. If you see something you want to take and I don't take it, take it. See, the 10-year is, you know, trying to stabilize and push higher. 30-year. I mean, if we can get a punch up to resistance on the bonds, that'd be great. Just kind of waiting. You can see, though, quiet day. I mean, we're having a little bit of a drop in bonds, but metals, just gold's kind of sitting, you know. Read through the PDF I put in the elite members area, Stephen, and read what I wrote about gold. So far, that's pretty darn, you know, kind of looking accurate so far. Yeah, exactly. ZB monthly has 2-bar exhaust, and on the ZB monthly, not only does it have a 2-bar exhaust, but just go and look at something for you here. on the ZB monthly here, what we can see is that if I bring up, look at this. This is the ZB quarterly. See, that's another thing I don't like about TradeStation. You don't get the quarterly charts and the yearly charts, but in Sierra charts you do, which is awesome. So this is the quarterly ZB chart. So see, trending down, pullback, boom, pullback. I mean, I think we're going down, at least back down to the quarterly near low at 116. So we'll see. I mean, could be one of these instances where it wants to push higher first, but with that month, like, you got to ask yourself, where is that monthly doing the 2-bar exhaust into? Well, it's doing it right into this quarterly resistance pocket. Beautiful. Isn't it exciting, Stephen, when you can start to read the markets like this? I love it. Just like reading a language that you can. Can you imagine, like, I look at people trading with like moving averages and Fibonacci's and stuff. I'm like, I mean, I would just feel lost. Like, the amount of, when you learn to use this and read it, the amount of confidence you can have in your setups is insane. But some people, you know, like, it has to click with you. Like, even when my mentor taught me, and a lot of other people, like, it's got to be, this is a type of technical analysis that's, you know, out of the box. So it's got to click with you. And if it does, you're lucky. There's ultra bonds. Yeah, these are headed. This is why I'm so bearish on stocks here, because I think the recent break that we've seen in rates, you know, coming down, I think that's over based on the quarterly charts for the bonds. Now if we can get a little pop, get some short action going later in the day. Oh. So Stephen, what did you trade today on my calls? You traded silver short at 32. You took another short at like 30, right? That you made a little bit on. Those are good trades. Anything else? You did something with the bonds, didn't you? Can't remember. Yeah, it sure looks like it. Absolutely. I think it's going to break. That's what I'm waiting for. And I think we're now in the, you can already see the daily trend support low back here is already broken. Look. This is Ultra Bonds daily. You see how that old trend support low coming across here? Make it blue. We're breaking that today. Just fantastic. Tells us that weekly support, even though we're in weekly support right now here, you know, it's probably going to break because daily support is breaking and we're coming out of the monthly 2-bar exhaust and the quarterly pocket. You see, this is the power of the multiple time period analysis. When you understand what the quarterly is doing, what the monthly is doing, and how that's affecting the weekly and funneling it down to the daily, now you're looking at this daily range here and you're asking yourself, gee, which way is this going to exit? Well, likely to the downside because of what we just went over, right? And does that give you confidence shorting rallies on bonds for the next, you know, few weeks? Yeah. This is what's, you know, and I'm thrilled that you're understanding and picking it all up so quickly, Stephen. You know, most people, it takes a while. I've had several people go through the course and, you know, some people get it quicker than others, but a lot of people just don't get it. It's not because it's just their mind doesn't process it in that way. But I'm really excited as I release it to a wider audience to see, you know, how many people really get it. But you also got to put in the effort, you know, like you put a lot of time into going through the lessons this weekend. You've been here at the live streams, you know, so you've already gotten a lot of repetition, which helps. A lot of people aren't willing or don't have the time, the motivation or whatever to put in that type of effort required. All right, it's 10:30. We're just kind of hanging out. At least Waller starts to speak at 11. That might do something. Got to go to the gym at some point, but I don't want to miss We'll see. Oh, here you said I made a few hundred on the SI short and ZB short. Nice. Yeah, it's motivation. Exactly. I guess intellectual capacity to some extent. I mean, some people just don't, you know, just like I'm not an engineer or, you know, whatever, a doctor. Some people, you know, for me, I've always been more about patterns and things like that. So I don't know. Everybody's different. Like even when my mentor, when I started studying under him, and, you know, I went all in on just learning everything. And then when I sent him, you know, my first attempt at a video, this was 15 years ago. I don't remember, a long time ago. And I said, hey, am I starting to understand this? And I remember I went through a Euro chart and I went through the yearly, the quarterly. I went through all these charts. I said, so based on all that, I think this is about to happen. He wrote back. He's like, yep, you're getting it. I was like, all right, good. Yeah, I think it is motivation. All right. What a day though, huh? Watching paint dry. I thought we'd have a little more, but this is not surprising to me because of the markets we're in right now. There you go. ES is pushing higher, kind of like we thought. It's not surprising to me just given the type of market we're in right now. Like when you've got this, you know, write this down for yourself in the future, Stephen. When you see this setup here, that big weekly congestion entrance down with a big move back up, all that chop there, it's, you know, good to be cautious, which is why we're being cautious. Another thing people don't realize, like a year is, you know, 365 total days, you know, about 21, 22 trading days in a month, right? So whatever, 250 trading days, something like that. I mean, that's a lot of days. You just got to be patient. All right, so here's the ES pushing higher. You know what I want to short up in here at the 11 o'clock. Have anything up there just right now that I'm crazy about, so I'll wait. Yeah, congestions are good. I mean, I like them all. I'll take. They come in when you're day trading like this, like especially the way I trade. You know, I'm discretionary. I have my setups, my patterns, my methodology, all that stuff. But I'm just kind of really trying to get in the flow of what the overall market is doing, and then looking for setups that conform to what's happening, right? So sometimes it'll be a congestion trade, sometimes it'll be a trend trade, whatever. But I'm typically looking for exhausts that reverse. Those are the trades I like the best because I've found that those are the ones, you know, that give the best reward when you get them right for the risk you have to take. But you can make a lot of money in congestion if you just focus on only congestion. And then after the course, you'll be able to come up with different specific aspects of your setups that, you know, you can, if you want, you can tell me, hey, I think, you know, when this and this and this happens, and, you know, what do you think about that? You know, and I'll tell you what I think. I mean, you might have a very specific trading plan. I'm sure you can automate some of this too. I mean, I know you can make consistent automated returns for sure. Especially on the higher time periods. If you were to automate like I already know how to automate a daily program into the, I just don't have, it's just another project that I don't have time for right now. But, and I'm not an automated trader. I think you can make way more money if you're a good discretionary trader. You know, unless you're like a Citadel where you're, you know, running order flow, obviously, but I'm talking about pure speculation. Here's the NASDAQ pushing higher. I don't really like anything up here. I'm really hoping that stocks push back toward their highs today, because then at least we're at the make or break spot for the weekly. Like here on the NASDAQ, we'll be up in that resistance if we get a good strong close today. And that'll either set up like the dump or the breakout. We tried to get long ES 47.88 on the pullback, but didn't get filled. Bummer. Yeah, I took a little, I don't want to say a scalp because I don't scalp, but I threw on a couple contracts on the Dow down there when I said that support was strong. I just not, I'm not calling it out for the channel, because for the channel, I'm waiting for my very specific setups. But, that's why I told you guys should take, if you see something with your analysis you like, take it. And, the analysis itself is very accurate. So I got a little bit of lunch money from the Dow, which is good. Here. I got a little lunch money from about, but this is not going into the channel record, so don't worry about that. I'm only, for transparency and track record, it's only trades that I call out, like, okay, I'm taking this, stop, those are the trades I'm posting. And those are the juiciest ones that I'm waiting for myself as well. But on this one here, we were coming out of so much support, I just decided to buy a little in here, and I covered right up in here, just on a couple contracts. Yeah, exactly. If you have like automated trading, you've got to, it's not my thing with the automated trading. Some people are kind of, plus I think automated trading is good when you have a lot of emotional or psychological issues with trading. A lot of people who can't handle the psychological side end up looking for bots. And if you can manage the psychological side and get good at it discretionarily, you can potentially like make a lot more money. Let's look at the Russell. Russell's popping. I don't really see anything good to lean against for a short on the Russell. I mean, we'd have to go pretty high up there, but you never know. Like, yeah, if the Russell fired up into the mid-70s, it would be great to short up there, but not for right now. Let's look at the bonds again. The bonds. Here's the 30-year ZB. By the way, I know you know ZB, but I'm always saying like the 30-year, because sometimes people might watch this video and they don't know what the hell ZB is. Yeah, ZB would have to punch a little higher. UB. We had a lot of support. We still have a lot of support down into 121.22 for ZB. So, and we got resistance. I'm more interested in shorting, but if we kind of get stuck and consolidate down here the rest of the day, good level to watch is 121.20 for ZB. Because we're breaking out to the downside here on the daily and the weekly, this is one thing it took me a long time to learn. It's like, just because this is breaking out doesn't mean that it's going to be, off to the races and we're going to collapse. Like, no, it'll still oscillate as it's going down. It doesn't mean we can't take longs. We just got to be more careful. Have it run on a demo account and compete against it for a YouTube video. Yeah, I mean, that would be cool. Maybe you can develop a bot for us. I can trade so much better than any bot that I can develop that for me, it's better just to trade. But yeah, you could definitely, I mean, certainly one idea for a bot that I've had is that, let's say you come up with some relatively simple system, but it's only good, even a scalping system, whatever, but it's auto, and it's only good like from the long side, when the energy is up, and it's only good, but it gets killed, if you run it all the time, it gets killed, right? But from the long side, it's awesome, or from the short side, it's awesome, right? Well, I've had a thought that a bot like that, because I'm pretty good at calling, like, okay, the energy's shifting now from long to short, like we would be on the right side of what the hourly energy is doing, a lot. So to be able to flip a bot, like a scalping bot, on and off, depending on the direction for that hour, let's say on the indices, that could potentially do some major damage. That'd be pretty cool. That's something I've thought about for a long time. I just kind of a project for the future. I don't have time for it right now, but like, imagine right now, like, all right, indices look bullish for this next hour, right? Because they did. That's why I got some lunch money on the Dow. But imagine you have a bot down here, like, all right, flipping that bot on, long side only, and yeah, it's going to have the odds, seriously in its favor if you put it on in the direction that you think it's going, right? So I think. So it's 10:30. Still waiting. I was going through the list. We got Ultra Bomb. Kind of wait. Look at gold. Doing nothing. Silver, that's what I thought. It's kind of definitely weak. Could keep an eye on. I mean, while I'm waiting for the big short, or you know, the juicy short, I mean, might just keep an eye on some of these little microstructures, like. But the channel is not about trading microstructure. Like if I see a microstructure trade like that I want to take, you know, get some lunch money, I'll just do that on my own. You guys are free to just take whatever you want according to how I'm analyzing. Here is copper, just doing nothing, waiting. Platinum, nothing, waiting. I mean, what a slow day. Might just have to wait. Might have to go to the gym. And well, Waller's going to start speaking at 11. I don't want to miss that because that could cause some volatility. We'll wait for that. Good luck with your thingy, Steven. Yeah, crude is just breaking a key support level there. Wow, interesting. That is a key level there for crude breaking down. Might have to play the short side on crude for sure. Big breakdown. Nat gas. Kind of waiting. Let's see where ES is at. Yeah, just kind of waiting here. NQ pushing higher. Yep, just waiting. All right, I'm going to take a break. I'll be back in about 15 minutes. All right, we're back. We're waiting. It's 10:46 a.m. Eastern, so we'll see what we got for the 11 o'clock check. Slow day today, but good good opportunities in the 8 o'clock hour with bonds and silver. A little bit of a scalp long in the indices for the 10 o'clock hour. Not official though, just for those who saw some opportunity. Now we're just waiting, so let's see what we've got for the 11 o'clock hour coming up. Got some tea, ready to go. I agree with you, Stephen. It's a good market to, I'm kind of hoping for a pop that I can get short into for bonds. Bonds look like a good one to wait for. Silver, gold, not really gold, but silver, copper, platinum. If I can get an opportunity to short those, I'll be happy. The indices, you know, you're stuck in this range right now. S&P's just dancing around 4,800, currently at 4,814. It's not a good place to participate, in my opinion. All right, so here's ES again coming up in the 11 o'clock hour. I don't really see anything that I'm interested in. Let's look at the NASDAQ. Similar, we're trying to punch back up and through the value area high up here on the monthly. So I'm not going to do anything for up here, but for all of you people who are longing the NASDAQ right now, thinking it's going to the moon, be careful because we are getting inside the monthly value area to the upside, which is a dangerous place to long. Keep your eye out for that. Let's look at the Dow. You see the Dow is weaker. Just a horribly tight range here on the hourly Dow, and look at the weekly. Consolidating all this last, 3-4 weeks after that big move up. Be careful up here. Looks like some people are still going long, but there's a lot of distribution. Somebody is absorbing a lot of buying up here, and we're not going higher. So I'm waiting for us to break lower. But we need to wait and have patience until the party starts. Here's the Russell. Definitely very bearish, the Russell, for a lot of different reasons. But waiting for a good pop. If the Russell could give us a gift by exhausting up into anywhere 1976, 1980. I mean, that's a long way off from where we are now, but you never know. Up there is where I would love short. But let's see what happens. A lot of resistance up in there. All right, let's go ahead. Nothing for the 11 o'clock hour. Look at the 10-year. The 10-year is still, as we called out at the beginning of the broadcast, a ton of support on the 10-year at 112.2, 112.3. So that's why I did think that stocks were going to rally, because the 10-year was stabilizing. So rates were stabilizing, rates pushing a little lower, buoy stocks, and that is what we're seeing right now. So I took my quick little lunch money trade on the Dow. But still waiting for the big, fat, juicy setups to come to us. Those are the ones where we make the real money. But you got to be patient for those. And the this is the 30-year ZB. Really just looking quite weak, but I would want to push back up to these highs up in here. Had an order to short at 13 earlier, but it gapped lower after that hourly close, so it didn't get filled, but a good call. Still waiting to short the bounce there. Ultra bonds. With the 10-year kind of stabilizing, even though the yield curve is uninverting now, signs of a recession, which means we could see some pretty big differences where you have the long end here, the 30-year, the ultra bond heading lower, while the 10-year is kind of stabilizing and pushing higher. For those of you who trade bonds, be aware of that. If you've been trading these catch-up trades and things like that, when the yield curve uninverts, the relationships between the short end of the curve and the long end of the curve is going to change. So pay attention. Important. with the ultra bond here. Still some resistance here, but I gotta wait for a little bit of a bounce here. We're in the monthly value area low. Gotta be careful shorting down there. Let's look at gold. Yeah, gold just waiting for a bit of a pop. Not really interested in gold today. Pre-market report, I talked about gold being basically stuck between, you know, fear flows for the Yemen war, some money coming into gold, but then you've got, you know, lack of liquidity flows pulling out of gold. So you've got these cross currents that make gold difficult to trade right now. There was a good break of support during London for sure, but since then we've just consolidated and done nothing. Be careful with gold for now. Let's look at silver. Nailed that 23.32 level to the wall here earlier today, but I didn't short it because I was kind of waiting to see if we closed up there on the hourly, and we didn't. And I didn't see the volume coming in the way that I like to see the volume coming in. And yeah, silver dropped a little bit from there, but still kind of stabilizing. So kind of hoping we get a ramp higher to get short in silver. Still a ton of resistance up there at 20.30. If we get a pop up there this hour, I'll definitely short silver. So we'll see. You never know. We've got about 8 minutes to go, and silver could get up into that resistance level again. So keep an eye on silver. It could be a good one for the upcoming 11 o'clock hourly close. Come on, silver. You can do it. And copper waiting to short. See, very tight range. Just not a lot of good action right now. And that's okay, because we're saving money, not taking stupid trades. Picked up a little bit of lunch money on the Dow. Life could be worse. We're in Sweden, freezing our you-know-what off. It's -10 outside. Woke up to -20 Celsius this morning. Cold. Colder yet for a California guy. All right, looking at platinum. Waiting for a bounce. I like 916 for platinum. It's kind of nice. Up in there somewhere. The higher the better. Just waiting patiently. Crude. You guys, that broke some, I mean, there's a lot of support at 72.40 that crude couldn't hold in spite of what's going on with the Houthis in Yemen. I mean, crude is just, if we get a bounce in crude up to, I don't know, 72.90, 73, depending. I got to see the pattern that unfolds during that situation and the volume, but definitely open to shorting crude. If we get a good pop back into resistance, it was because you know you just have so much support right now on the monthly and the weekly charts, and the daily just can't sustain a rally. What is that telling you? There's something wrong with the long side of crude, which means what? We got to look for shorts until the longs can prove themselves in the middle of a hot situation with the Houthis in Yemen, or Houthis. I don't know how you say that. Maybe somebody from Yemen can join us on the live stream. Let us know how you say Houthi. Houthi. Maybe a Houthi can join us on the live stream. You never know. With YouTube, anything's possible. All right. Looking at natural gas. Weekly is very bearish. Pointed this out earlier. We gapped open underneath the weekly true average there. So bearish day for nat gas. We do have a lot of resistance into about this area here that we're pulling back into. But I don't like it. I like, you know, I like taking exhausts. We'll take some breakouts sometimes, but it's rare. And, you know, when you get this little pullback pattern, it's like, okay, well, I like this pullback in natural gas. Maybe I want to short here. It's not a bad spot to short. You've got some resistance there. But you could also see a push like this. I like to wait for the exhaust. That's what we will wait for. Dollar still strong against the euro, hanging on to the gains. Trading at 109.12 on the futures. Check out the pound. I haven't checked it out in a few minutes. Yeah, so certainly a big flush on the pound. I do expect a stronger dollar overall. So, I mean, if the pound rallied up to 127-ish, be a good spot, but gotta wait. Look at Swiss franc. Do a whole lot. Let's make sure we don't miss silver. Yeah, we're trading 23.18. We gotta wait for it to bounce a little higher. Look at the CAD. It was not a bad little short there on the CAD at 8 a.m. Maybe it was 9 a.m. Gotta keep an eye on the CAD. Keep an eye on these sneaky currencies. I'm not a huge fan of the currency futures, but when everything else is quiet like it's been, we can make some lunch money on the currency futures. I follow them to know the strength of the dollar, but I don't typically trade them, but I'm not against it. We'll start taking a closer look. Certainly do a forecast for them every day. I just don't really trade them. Here's the New Zealand dollar. Not a whole lot shaking here. On the odd, there wasn't much shaking either. Let's look at the yen. Trade the yen very often. Prefer to trade bonds. They kind of move similarly, but not a lot happening here on the yen. And the agriculturals, we said we're interested in the short side, but it had to go higher up. You see corn had a pretty good exhaust there to short. I just didn't have a good level to short into, so not really doing a whole lot on the ags. Let's just check Ethereum and Bitcoin. Also choppy, wild, not a lot of good trading. Let's look at Bitcoin. Interesting. Got a little bit of resistance here on Bitcoin for sure, but I don't know, the weekly, it's a mess right now. I think I'm taking that. So that is our check for 11. We've been here for 3.5 hours. And we're stuck in the doldrums. We're on our sailboat in the middle of the Atlantic Ocean. There's no wind. It's about 1,000,000 degrees and we're just stuck sweating and waiting. We're in the doldrums. Just waiting for this market to break out. The good news is we do have the bond complex, treasury space leading us to the downside. Rates on the rise. You know, metals I think are going to be very affected like that by that, especially with a strong dollar. And stocks just waiting to get short. The higher time period structure is short. As long as you know what to wait for, be in good shape. And we got to wish our man good luck today. You know what I'm talking about. Good luck to you, my friend. Hope it goes well. And all right, we've got 30 seconds. No juicy trades, but are there any lunch money trades for the 11 o'clock hour? You're not familiar with how the channel works. I'm calling out my top picks for official channel picks, and the rest of it is my analysis. You're free to do with it as you wish, just as I do with it what I wish. Let's see. I mean, I think the bonds look like they want to head back down. I think the well, we got the Fed Waller speaking right now too, which is fantastic. That's great. Yeah, look, some major volatility coming in right away. I guess the speech, is it he or she? I'm not sure, but was probably pre-released. The algos are on it. We're already moving, so that's good. Some volatility's coming in. Fantastic. I was going to say I could short some bonds for some lunch money this hour, and they're already dropping. And let's see what we got on ES. Nice little resistance pattern. Like I said, you got to be careful going long up there when you get close to the monthly value area high. Very careful indeed. Looks like stocks are dropping. So somebody's not liking something about Waller's speech. The bonds are dropping, stocks are dropping, everything's dropping quick. There were no hourly setups, so that's fine. But let's see. Look at silver just pushing down nicely. See, all these are correlated in the end. So I'm just kind of scrolling through here, guys, looking to see if I want to perhaps partake in any lunch money trades while we wait for our next hourly setup. Looking at, I think in that case, I mean, you've got a lot of, the 30 years got a lot of support that it's breaking through right now. So that happens, look out. I mean, if the 10-year starts to break, oh boy, not looking good for stocks. The 10-year has broken through an extremely strong support level at basically 112 and 230 seconds. So something's going on with Waller, and the market is interpreting it as very, very hawkish. Meaning rates up, bonds down, stocks potentially down. So that's kind of where we're at. Still no trades though, because we're waiting. Definitely looks like, you know, look at the ultra bond just collapsing here. Beautiful situation. I might have to wait for a pullback on the 15-minute chart to jump on board the ultra bond train for some lunch money. I'll let you guys know. I think it's just collapsing. I'm trying to only call out, you know, the best setups for the channel, so I'll let you guys know, you know, when I like those trades. Right now, I'm just going to keep an eye on the bonds. The ultra here, you've got the 30-year. Pretty much what we called coming into the day. Doesn't always work out that way. Today it did. I think some people are going to be off sides here on the bonds. See if we can. Basically, we're just looking for some resistance now. ES back to 4802. So kind of hanging out there for now. NASDAQ cycling through. You'll see the best opportunities instead of shorting stocks. Definitely, like I said, what did I say at the beginning of this hour, you guys? I said, be careful longing up here. You just ran smack dab into the monthly value area high. And that was, looking back, that was pretty solid. Let's see what the Russ is doing. Maybe the Russ is the one I've been waiting for. Might have to trade the Russell. We do have a, yeah, I think the Russell has a decent resistance level in 1948. Still kind of in daily support, which I'm not nuts about, but might. Russell looks like it's just getting ready to collapse. But we are, I just wait a little bit. Here's the 30-year. Yeah, I think the Russell not looking good to the downside. Meaning I'm going to be looking to short it. Going to be patient for now because we are in still quite a lot of daily support and weekly support and monthly support, but I think it's all going to break. Question is when. Is it going to break now or later? We're going to have to wait and see. So look at some. Might take a lunch money trade, but I will know. When I say a lunch money trade, I mean that's just me kind of, I don't scalp, but I'm just taking smaller trades on my own accounts, waiting for the good ones to set up. But I'm giving you my analysis. The official ones, I will call them out for us all to keep track of on the channel. Right now, it's looking like with bonds breaking through support, I think the Russell's going to break lower here. So the hourly didn't give us anything great. Well, I didn't call it out, but it's looking pretty weak. So you guys can do what you want with that information. So we're just waiting for a setup here. Russell looks weak. As long as, you know, because the Russell's very rate sensitive. So the 10-year broke through a key level. This is the 30-year. We do have Waller speaking, so just keep that in mind. But I mean, we're kind of pounding through some key levels here on bonds. So I think that that's going to weigh on the indices. And I do expect Russell to be the weakest. And now you can see it is trying to push lower on the 15-minute chart. It's just wrestling is, I think once it breaks through the support level, you could really see it accelerating. So just going to keep an eye on the Russ. Looking at the volume profile here. Curious to see what Waller says later. All right, let's look at ES. Just want to get a sense of what's going on over here. Not as bearish as the Russell. We got some, I mean, 4,800. If that starts to break on the ES, then the Russell could really start to accelerate to the downside. But the ES a lot more choppy right now. NASDAQ also. I think the NASDAQ is going to want to test down to that 16,840 level. Dow heading lower. Russell, no doubt. So I'm just kind of waiting for a little bit of a pop on the Russell. Lunch money, shorts. Nothing juicy in terms of everything's breaking out here. Bonds, yeah. Gold nicely. I think silver. I called silver potentially dropping down to 2280 today. It looks like we could be on the way. Silver's also got a lot of resistance up into 2316 now. So could potentially get short silver as well. A lot of resistance at 2310 now on silver. But still just exercising patience. Russell dropping nicely. Just give this a chance to develop. Let's see what Waller said. Really just, if we get a nice, even on the 15-minute chart, get a little bit of a pop on the Russ. That would be nice. We've got about 3 minutes until this 15-minute bar closes. Really, I mean, yeah, bonds are getting crushed here, guys, so be careful because stocks are probably going to follow. Gold, silver are going to follow. That's why crude's been unable to hold any gains. Check platinum, yeah. Now it's just waiting for something to give a little bit of a pullback. Copper's not really following us lower yet. Silver trying here. Silver looks weak. Gold getting torched. In about 2 minutes until these 15-minute closes. Bonds look very weak, you guys. Very weak. NASDAQ. Maybe a better bet for some lunch money trade because the Russell is still, it's in the monthly value area low. The NASDAQ is up near its monthly value area high. I think the NASDAQ, choppy day, gotta be careful. Probably wants to cycle back down to 16,840. Just kind of cycling around here. You know, when Waller's speaking to, it could be, you know, things get pretty darn wild. Platinum looks pretty weak. NASDAQ, you've got a good hourly resistance pattern up there, but you don't have else. I'm going to wait till the 12 o'clock hourly close to see if anything really good sets up. In the meantime, I'll just see if anything develops. Watching and waiting. You can see the Russell here kind of recovering off that. I think we're still going to head lower, but you see still in congestion. It's still a dangerous place to trade. Not even taking any lunch money trades right this moment. Waiting to see how it settles. Certainly the NASDAQ. I mean, still a lot of support here. You know, still a lot of support. You got to be careful. I think you're going to see just choppy now between support and resistance on the indices. So be careful. That's why I'm being careful. Bonds. Bonds are the usually, I want to say easier, but you get you just get less intra-bar volatility typically. A lot of resistance now on the 30-year, which might DOM over to the 30-year. You got a lot of resistance now on the 30-year at 121.19 up in here. So it's going to be interesting to see how price reacts to that level. Just going to check in on Zero Hedge and see if they've got any news regarding Waller. Something when his or her speech hit the books, things went nuts. Sorry, hit the news tape. So let's see. There was an Empire Fed manufacturing survey. 2-month collapse. Bunch of information. So just kind of hanging in there and waiting. Quite pleased. Trading overall last couple weeks, just being 5-6 days, just being patient, waiting for this market to head the direction we think it's going to head, and you got to make hay while the sun shines and keep your powder dry while you're waiting. Patience is the #1 key. But just look at this chop here on the Dow. Even the Russ, you know, I think this thing is going to crack, but just, it's, like I say, it's a lot of temporary support here on the weekly, the monthly, and the daily. I think it's going to break, but I think it just may need to pop. I'm waiting to kind of short a little bit higher. You know, had we had some follow through to the downside and really start accelerating to the downside, sure, try and make some lunch money trade on 15-minute pullbacks. But here you've got the 15, you know, spike down after that. I think it was Waller's speech hit the tape and sucked back up. Stocks look stable. Bonds are collapsing. Rates are rising, but, you know, nothing very clear in terms of trades at this exact moment. There's still a lot of resistance on the 30-year up around 21.19. But you got to be careful. A lot of volume coming in on the 30-year at about 121.10, 11, and prices lifting on that volume. Tells you that there's some buying stepping in, lifting the market. So some support. Let's look at crude again. Crude was going to potentially maybe set up for a short at some point, but I'm waiting. And dollar's still kind of where it was against the euro, 109.13. Looks like we could see a little midday rally here in the euro. You know, weakening dollar. Maybe bonds will stabilize. We'll see. Maybe stocks will pop. Just kind of waiting for this pop. And, you know, these, if you wait, good things will come. Some people have to wait a whole month for a paycheck. Trading, you just wait, and it comes when it comes. Here's the pound pushing higher. Yeah, what I said earlier, a lot of resistance up into 127 on the pound. So I want to keep an eye on that. Bitcoin Ethereum. So the pound I'm kind of interested in, but have to go quite a bit higher. Just cycling through a lot, guys, because the market, you know, when it gets volatile like that, things are shifting, and that I'm on top of it and I don't miss anything. You see the ES kind of recovering off that initial drop. NASDAQ also just kind of sitting here. I think this is an area to be very careful. A lot of cross flows. You can see it in the volume profile. You can see it in the charts. That's why indices are not a good bet up or down at this exact moment. Caution is really what we need to be on the lookout for. And this is interesting. I think, you know, the 10-year now got a lot. Ooh, Guys, you got to look at the volume profile on the 10-year. Wow. Interesting. Interesting indeed. I think bonds are finding some serious support down here. 10-year especially. That's why stocks are looking pretty bullish. I think we're going to put in a little bit of a, that seems to have been a flush here on the 10-year. You've got so much support down here in this 112, 2.5 area. Just keep an eye on this. I'm waiting until the hourly closes, but might be doing a little bit of lunch money longing here on the 10-year. You guys are free to take of that what you will. 10 years pushing higher, which is nice. You can just see on the volume profile a lot of support coming in here at about just below 112. You can see an enormous amount of support on the volume profile. Hi. Watching and waiting. A lot of support on the 10-year. Pretty volatile. Just kind of keeping an eye on things, guys. A lot of support. 112, 2.5. And a little bit of lunch money action. Child is having a breakdown. She's always tired at this time of day. It is 11:25. I don't scalp much, but there's a lot of support, you guys, at 112, 2.5 on the 10-year. Resistance at 112, 5.5. So just kind of keeping an eye on this. You love it when your 4-year-old's having a breakdown. Take a break here in a moment, guys, and go up. $11.27. Just quiet because I'm thinking. Listening to my child having a breakdown. She's howling. She can't just cry, she has to howl. ES at 48.12, NASDAQ above 17,000 for now. So if we close around here for the 12 o'clock hour, might have to long the 10-year, but I'm going to wait, see where we're at. And in a moment, I'm going to have to go upstairs and check on my child and see why she's having a breakdown. She's just one of those kids who has breakdowns a lot. Some kids are like that. So it's 11:29. Going to close here soon. So I'm just going to take a break, you guys, just kind of letting this thing play out. I'll be right back. Alright guys, I'm back. So just keep in mind you got a lot of support here on the 10-year. Child was just having a nervous breakdown because she was very hungry. Can't just say, oh, I'm hungry. She has to throw a temper tantrum so you can disturb the peace in the house. You guys know how it is, kids. All right, so we're just looking. There's just a massive amount of support here at this 2 level. You see the volume coming in down here. So just kind of waiting to see. Looking at the 30-year, you got a lot of support here on all bonds. So it's going to be interesting. I think we're setting up for a bit of a potential relief rally. What it's looking like to me. In that case, the ultra bonds and the 30-year, you can kind of see a lot of support here. So something was said in the Waller statement that caused this market to flush. And now it looks like there's a potential for a little bit of a midday rally in bonds if this overall level can hold. But the fact that so much buying came in there, I can see it on the volume profile, just like on the 30-year, just a massive amount of buying coming in there at 121.16. Right in here. So just keep your eye on that level. This is the 30-year. 10-year, of course, has all that support at 112, basically 112. $11.35, kind of getting a little late here in the day. Longer we stream, just kind of a good day to not do much and just wait for some clarity to set up. A bit of lunch money trading, but no big fat juicy ones yet. I might just call it a day, you guys, and I'm gonna go ahead and go eat some dinner, wait and see how this sets up. But it's a good day for me to conserve my energy for the rest of the week. Just know you've got some support now coming in on the 30-year right here at about 19.20. See it's reacting off that level, and the 10-year as well. So it's, we'll see what happens, but just keep an eye on that level. And thanks for being here today, and wish you guys some good trading the rest of the day. Take care.